Morning, everybody. Good morning. Hopefully, no audio problems today. You guys hear me all right? Hey, Steve. Nice to see you. Gina, we are like in sync this morning, it looks like. Hey, Jay Trader. Nice to have you. Good to see you guys back in here. I love it when first day people come back for the second day. Makes me feel like maybe we're doing something right here, you know? Good morning, Erla. Nice to see you. Guys, it's Friday. Hey, Sid. Welcome back. We are on the brink of the weekend, right? What a wonderful thing. Um, we're going to have a great class today. Excuse me. Um, I'm excited. It's been an awesome week of learning. I hope you guys have learned a lot this week. I'm learning new stuff, and for me, it's always exciting when I screw it up 1,000 times in the beginning because it's new, right? That's what happens. And then you start to get just a little bit better each day. That's kind of what my week has been. I hope your week has been the same. Um, a lot of routines, a lot of patterns, guys. That's all we're doing. And the first routine for me, well, actually, yeah, this is the first. I go check news, guys. I wake up, start the coffee pot, come in, turn on my computer, and I check news because I want to know if there's anything going on that can make the market bump and jump and be a little erratic. ForexFactory.com does a great job of telling me what I need to know. And I know that there's some people that look at everything. Guys, I look at the US markets and I'm looking really for high and medium impact. There's a little filter right here. I don't care what's happening in Canada or Japan or Great Britain. Doesn't matter to me. Doesn't affect me. I trade American markets, and therefore I'm looking for American news. And I'm not even looking at what they're saying, guys. I'm looking for red boxes and orange boxes. And these boxes tell me, hey, maybe you shouldn't be in a trade right now. Maybe you should be on the sidelines because there could be a big emotional response. So we did have building permits at 8:30. Didn't do much of anything to the market. 12:10 right after class, Waller's going to speak, has the potential to move the market. So every morning, that's where I'm looking. And then I take you guys over to the Nexgen page. And right here from the Nexgen page, I go to the trading guide. And the trading guide is where all the answers come from. So the Nexgen trading plan, guys, indicators introduction, understanding trend, direction, terminations, all the things that we talk about each and every morning. You can come back and study over the weekend if you want to. And then there's a little bit when you guys begin to work in the market flow, and then personal trading journals. I'm going to give you that. There's a lot on the psychology. I encourage people to go after that and take a look. And then we have frequently asked questions, common terms. I'm going to go past the frequently asked questions, and I am going to go to the common terms. Hey, good morning, Zorro. Hey, Marlon, good to have you back. And guys, I'm going to highlight one particular common term. And this is the high probability trade, guys. High probability. That sounds good, doesn't it? This is when each indicator on every chart agrees for the rules for the trade. This is when triggers are the strongest. This is when there's no termination conditions. There's nothing in between you and your target. Good morning, JK. Guys, high probability should instill a little confidence just from the name. High probability is the best of the best. And high probability is our focus for the first hour, every hour. Since I have so many new people, heck, it might be an hour and a half. I can do whatever I want, guys. My classroom, I have the microphone, right? So we're going to go over this trade, and we're going to talk about it. And we're going to talk about this one specifically because this is a trade that typically wins 70 to 80% of the time if you follow the rules. So we're going to learn the rules. When you have a win percentage like that, one of my favorite phrases is confidence comes through the memory of success, guys. And if you're successful 70 to 80% of the time, well, then it just stands to reason that you're going to become a little confident, guys. And that confidence is you building trust in the idea that you can take a trade that has been proven to win more than it loses. You can take a trade that creates more wins than losses, guys. And that's why we focus on the high probability trend trade, because as a brand new user, we want to keep it simple. We want you to find that success that eludes so many people. And we really focus on this trade because this is the trade that teaches you to read your indicators, to read your charts, guys. This is the trade that gets you comfortable with recognizing advantages. And that's really what my classroom is. People are like, oh, I'm going to go to Mark's class and I'm going to learn to be a day trader. Guys, you're going to come to Mark's class and you're going to learn to be a chart reader. You're going to learn to look at this chart and you're going to floor yourself with how smart you become in a very short period of time. Because chart reading is the skill that we need. Chart reading is 90% of your day, guys. 90% of my day, I'm waiting for advantages. 90% of my day, I am trying to follow my rules. And if my rules aren't met, I simply stay out of the market, because I'm going to say this a lot today. My rules are patterns that have been proven to win more than they lose. So I'm focused on that execution. Once you're comfortable reading these indicators, and it doesn't take long if you do the study, you will understand where the market is likely to continue. You're going to be able to figure out where the market is likely to go, and you're also going to understand where the market is likely to stop. And you're going to incorporate these concepts into everything you do every day, whether it's finding trades or whether it's managing. But the ability to read, guys, it's going to get you in the market when advantages are present, and it's going to keep you out of the market when you don't have that statistical advantage. So when we talk about the high probability trend trade, let me get my laser pointer. Pew pew. There's only 3 rules. 3 rules is pretty cool, right? That's not a lot to learn. Each rule, when it's true, provides an advantage, and we're looking for advantages, guys. You're going to be speaking to yourself in terms of advantages. So rule number 1 says that you must have strong trigger lines. Strong trigger lines will give you the advantage of momentum. Momentum is an advantage that pushes the market in the direction of the overall trend. Momentum can break key Fibonacci areas. Momentum can even cover mistakes, guys. Momentum is rule number 1 for a reason, because it's hard to stop a freight train when it's doing 100 miles an hour. Rule number 2 says termination conditions false. Guys, these are those likely to stop areas, these areas that can reverse the market, these areas that can create an untradeable bounce. And when there's none in the way, you're going to have room to your profit targets. We're just going to call it a clear path, guys, because a clear path means there's nothing between me and where I want to go. And when I have all that momentum, it's going to be hard to stop me, guys. And these first 2 advantages, these first 2 rules being met, these are the 2. This is the base. This is the foundation. Once you're comfortable with these 2, and you can look at your charts and say, man, I have momentum and nothing in the way, there are so many opportunities to make money, guys. Your first rule, or rule 3, is specific to the high probability trend trade, guys. This is pinpointing that likely to continue spot, and it becomes a great entry, low risk, high profitability. And this entry area is specific to the high probability trend trade. Once you work these 2 into like second nature, you're going to find all the entry areas, and it's really going to open up possibilities. I teach on 2 charts. There are more charts available, but I only need 2 in the beginning because I'm learning to read my charts, guys. I'm going to use a large chart and a small chart, big and little. Grande y pequeño. And the large chart leads the way. The large chart is going to define direction. It's going to define momentum. It's going to find the areas that are important to us, whether it's because I don't want to trade into them or because I'm trading from them, guys. And these large charts are very slow moving. It's a broad stroke of a brush, and you're actually going to get all this great information from the first bar, the most current bar. Rule number 1 must be true on the large chart. We want to make sure we have that advantage of momentum. Rule number 2 must be true on the large chart, making sure there's nothing in the way. And once they are, that's when you turn your attention to the small chart. Don't get sucked into the siren song that is the small chart. It's just an entry chart. It's a refinement chart. Inside of this 1 bar, guys, there was a pullback and a continuation in the direction of the trend. The small chart shows you all the little bars inside of that. That's how we refine the entry. This is how we pinpoint where the market is most likely to continue, guys. The small chart entries are going to reduce risk. They will increase profit potential. And we use these two charts because they're very much a representation of the overall opinion, guys. Who are you trading with or against? Big charts define the areas, the direction, the momentum. The large chart reflects the large crowd opinions of the market. The men and women who create trends and establish momentum, guys, that's your large chart. Small chart is the small crowd who create these little rifts in the matrix, right? This little push down when everything says up. Guys, the small crowd fails typically 70 to 80% of the time. Whether it's intentional or not, we're going to call it a failure. You guys will be able to pinpoint exactly where their failure is most likely to happen. You guys will be able to use that as the area where the market is most likely to continue. And by using the refinement chart, guys, risk is minimized and profit potential is maximized. So, we're going to learn some rules this morning, guys. There's only 3. It shouldn't take that long, right? We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. Why do I say when it's okay to trade? Because if my rules aren't met, I don't want to be in a trade. If my rules are met, I can't wait to get in a trade because I have a statistical advantage. It's a pattern that wins more than it loses, guys. You guys can simulate, practice, do things. Get out of your comfort zone, practice management, work on your entries, all that great stuff, guys. Simulator, you can do no harm. All you can do is get smarter. And then you've got to post pictures in the room. And this is the first step to becoming a confident trader. Because to be a confident trader, you have to be a confident chart reader, guys. And one of the things that posting in the room is going to do for you is you're going to get feedback on everything that you see if you promise to tell me what you see. I'm going to look at your charts. We're going to look at your reads. We're going to look at your entries. We're going to look at your exits. And my job is to make sure that your read is correct. And if it's not, we'll walk you through it. We'll do some lessons. We'll give you stuff to work on. And the same is true with entries and exits, guys. Sometimes you take a nice exit, but there was an exit with less risk, or entry, but there was an entry with less risk. And sometimes you take a good exit, you're like, man, I got paid, but you could have got paid more, right? So we're going to break everything down. You have to post in the room, guys. Feedback is what changes the game for people. And then I say break everything. Break rules, make mistakes. Just be willing. Be willing to not be perfect as a brand new user, guys. And what we're going to do is we're going to work our way together towards following rules, to always trading the correct rules. And you're not going to do it until you trust it. And you're not going to trust it without a little repetition, guys. So give yourself some time. We're going to simplify. That's going to make it easier. We're going to talk about a high probability trend trade. We're going to learn to read our indicators. That's going to open the door for a lot more trades. So I'm going to give you everything you need this morning to be successful with the software. We're going to begin with a high probability trend trade, and that's going to carry you to another trade. I'm going to give you a plan for it. But we've got to learn the looks, guys. Have to learn the looks so they become easy. And that's where the second piece of the puzzle comes in. Nexgen gives you a spreadsheet. Every time you download software, it goes right into your Nexgen Study Picks folder. This spreadsheet has 4 tabs. There's a trade tracking tab. There's a learning my rules individually tab. There's a developing my trade plan tab. And there's the holy smokes, Mark did a lot of work for me. Almost 400 pictures of people using the software successfully. Let me go do a little study tab. The first tab is a really important tab because the first tab is where you're going to put all of your trades, all your simulated trades, you're going to post in here. There's instructions on how to do it. There's even instructions on how to annotate your charts to get really good, really fast. This first tab, I think, is the most important tab as you begin to work into finding your groove, because the goal is to go back every morning and study what you did yesterday. The goal is to say, all right, yesterday I took 10 trades. Let me go look at 10 trades and let me ask myself what worked and what didn't work and what felt easy and what felt forced. And what you're doing is you're really kind of recommitting to the looks that are bringing you success. And you are saying, whoa, these are the ones that I have to avoid. And guys, sometimes, most of the time, I didn't know I was making mistakes as a brand new user. And it wasn't until I posted in the room and actually showed my brother, hey, John, this is what I saw. And he's going to come back and he's going to say, hey, Mark, here's where you had a glitch in the analysis. And I'd put that in my notes section, guys. I would put that right into the notes section. So when I come back and study, I'm focusing on the patterns that bring me success. And I can tell you that if you give me 4 or 5 charts in the room, I'm going to begin to recognize your patterns. I'm going to begin to understand your plan. I'm going to begin to see what you're doing well and maybe where you need a little help, and then we'll work together to get you that help that you need. So we're going to learn the rules. Guys, break every egg. We're making omelets this morning. Keep it simple. And one of the easiest ways to get to where you want to be, guys, isn't so much taking trades, but taking pictures of rules being met, taking pictures of the perfect trade setup, taking pictures of the problems that are taking your success and committing those pictures to memory. So I'm going to teach using a lot of pictures. We're going to start with rule number 1 because, rule number 1 sounds like a great place to start, guys. Your large chart, your big chart, your slow chart, the large crowd has to give you strong triggers so that we can have that advantage of momentum. So when I open up my charts and I look at my large chart, the first thing I'm going to ask myself is what direction is the market moving? If the background on my large chart is green, the market is moving up, I'm in an uptrend, I'm only looking for rules to be met for high probability trend trades long. If the background is red, it's in a downtrend, I'm only going to look for rules to be met for high probability trend trade short. So in order to have rule number 1 met in an uptrend, my small triggers must be above the large triggers. They have to break away. They have to create space, guys. And when the smalls are up and above and the large are wide and angled in the direction of the trend, this space between them lets me know that the odds are favorable for the market to continue up. That odds favorable momentum, guys. You're going to hear that in class all day long. I had odds favorable momentum, therefore I was looking to go up with that momentum. Guys, this look pushes the market. This look can break key Fibonacci areas, and this look can really cover some of the mistakes that we make as new users and even kind of talk us into taking some chances because of the advantage when we're more seasoned. When I have strong triggers up, guys, I'll use that smaller, faster chart to pinpoint that retracement. And it looks like a tail on the large chart. You're going to be able to pick these tails out right where they're most likely to form using the smaller, faster chart, and that's actually going to become your entry for the highest probability trend trade. In a downtrend, the smalls below the large, the space between the two, the odds are favorable for the market to continue down. When you're annotating charts, OFM is an easy way to do it rather than typing out strong triggers. When I have strong triggers down, the market's likely to continue down. It has the potential to break key areas, guys, and you're going to be able to pinpoint on a smaller, faster chart your entry at Fibonacci resistance for the highest probability trend trade that you can take, guys. So strength is really pretty easy to determine. And let me open up a large chart. Crude oil's been a little wonky, so let's just make it big. Smalls are above the large are wide, angled in the direction of the trend. The space between the two lets me know that the odds are favorable for the market to continue up. Smalls below the large are wide, everything is angled down. This look lets me know that the odds are favorable for the market to continue down. Can everybody give me a Y in the room? If you're feeling, yeah, that's pretty easy. And it really is, guys. This is the easiest lesson that you're ever going to get. And we're going to use the analogy. It's Friday. I drag my feet on Fridays and talk a lot. I hope you don't mind. When I'm looking for strong triggers up, this is what helped me a lot. Maybe it'll help you. I hope so. I want you to picture scissors. Scissors that have opened up, guys. And those scissors that have opened up can cut. They can get some work done, right? And then when my scissors close, I need to give that 2 handles, right? When my scissors close, my small triggers return to the large. I can't cut. I can take a stab at something, but guys, scissors open wide, strength. Once those smalls return to the large, guys, once they work their way inside, this is visually a weakening of the trend. And when you have that weakness, anything can happen up or down. What you'll find if you spend any time with me in this classroom is that I'm a huge fan of language, guys. I think language helps to paint the picture when you associate it with a look. So odds favorable, anything can happen. Strong, weak, right? Where do you want to spend your money? That's my look, guys. Anything can happen seems like a rough way to try to make a living. Now let's go back to that crude oil chart. I want you to see it. There's that weak triggers, and look at the reversal. Here's weak triggers right now, and it appears to be pushing up. And then we're going to get into the idea that we're going to pinpoint exactly where the market is likely to stop, which is kind of cool. But that's rule number 1. Strong triggers, guys. Strong triggers lead the way. Strong triggers push the market. Strong triggers can break key areas. And that's what kind of takes us to this next rule. Termination conditions. They have to be false. What's a termination condition? It's a Fibonacci-based indicator that can stop the market, guys. Termination conditions are on your large chart. The large chart defines areas. These are what the areas are named. But you can think of them as, hey, it's just a horizontal line on the large chart. It can be a divergence high. And a divergence high means the market went up and down. And this pink line that comes right off the top of that pivot says, hey, guess what? There was a loss of momentum. Momentum is not following price. If it happens at a low, you'll see the cyan line. You're going to be able to see Fibonacci resistance and Fibonacci support long before we ever get to them, as well as these yellow 1-to-1s, guys. And all of these areas have the potential to stop the market. They may reverse the market. They might create an untradeable bounce. These horizontal lines on your large chart are where the large crowd are making decisions, guys, where the people that move the market are buying, where they're selling, and sometimes where they're just duking it out in a barroom brawl, fighting for supremacy. So in order to determine if these lines have the potential to stop the market, if they are a termination condition, we have to let the price bars get to them. So we have to let these dynamic Renko bars get up to resistance, or we have to let them get down to support. And what happens is when they reach this area, the decision making is set off, guys. Sometimes the buyers will exit their position. Sometimes there's a boatload of sellers waiting to fight the buyers. But once we reach the area, we're going to let the T3 trigger lines tell us whether or not we should sit on our hands or not. And guys, if price reaches the area and triggers remain below resistance, resistance is an area that may stop the market. It may create an untradeable bounce, guys. If price reaches support and the trigger lines remain above support, support may stop the market. There may be a fight. There may be an untradeable bounce. You will never know what's going to happen. And I'm going to tell you, each line you reach is going to be a termination condition, at least for a moment. But you knew about it long before you got to it. You can use the trigger lines to say, hey, no more long trades into this area. It's been reached. And it keeps you out of a lot of trouble. No more short trades into this area. And guys, this is the very basic rule number 2. If you get a termination that reverses the market, guys, that's a strong top. And a strong top is the precursor to the best trades you can take going the other direction. And if a termination reverses the market from a low, increases the likelihood of success going the other direction. So I want you to see this on a large chart, guys. Rule number 2, you know about these areas before you ever get to them. And you have to develop a little trust. So check this out. Triggers, whoops, wrong one. Get off of there. Triggers didn't break, no long trades, no loser. Triggers didn't break, no short trades, no loser. No loser, no loser, no loser, no loser. Holy smokes, no loser, no loser. Thank you, rule number 2. Ladies and gentlemen, you have the ability to know exactly where the people in charge are most likely to react, and now you have the most basic recipe ever to not trade into those areas. Can you give me a why if you're good with that? This is the first part. This is the one that's going to keep money in the bank. This is the one that's going to keep you hoping things happen that your indicators say aren't likely to happen. But areas break, right? How on earth could we get trends if areas didn't break? So an area is broken. A path is clear, guys, when both the large and the small triggers get below an area of support. So price reaches right here, guys, termination, textbook, 100%. Once your small and large get below, this area is considered broken. It has nothing to do with the price bars. It has nothing to do with the color of the fib. It has everything to do with smalls and large below. And what you'll find is that support begins to act as resistance. Market comes up, hits resistance. The triggers are way down here. I'm sitting on my hands and doing nothing. Have no idea what's going to happen. Once my smalls and large get above, well, resistance is broken. It behaves as support, guys. And your path will remain clear until you reach the next area, and then the process starts over. So let's go see if we can find a broken area. I bet we can. Smalls and large get below support. Support behaves as resistance. Down it goes to the next area. Smalls and large get below, remains clear until the next area. And this is where you're going to see kind of a cool thing, guys. Small and large get below the area, but I get anything can happen triggers. Rule number 1's not met, even if rule number 2 is. And sure enough, we get the retracement. And if we go to the most current bar, there's a break. Weak triggers gives a push. So you've got to really kind of go back and study this and learn this. And I want you to become very comfortable with the idea that areas can stop your forward progress, guys. And every time price reaches an area and the triggers don't break, pump the brakes. Wait a second. It might break. It might roll. There may be a fight that lasts for days, guys. And then once the small and large get below, we're going to give it the green light. There's the go. Look for those rules to be met for those trades. Look for those rules for those high probability trend trades. Go with the trend, go with the momentum, go with the path, guys. This is the easiest. This is my brand new user. And once you understand these, you understand a couple things. You understand the very basic termination, right? You understand the clear path. You understand the momentum. And we're going to piece those together to give you the second trade. Because when your small triggers absolutely smash through an area and your large triggers are lagging behind, because let's face it, they're lazy, they're slow. And you have that odds favorable momentum, guys. This is what we call a 50-50 look. 50% of your triggers are through, 50% are not. You could call it a straddle look, a one above, a one below look, whatever you want. 50-50 is nothing more than a reference to the trigger lines. If I have odds favorable momentum, this area has the potential to break. Let me write that again. Potential. Guys, it's not broken. Because we know the recipe for broken. Small and large have to. But guys, this potential to break, look, this is your second trade. This is your medium probability trade. And a medium probability trade is when most of your indicators agree for the trade. However, small issue exists. The area is not broken yet. So you may need to manage these a little more assertively. Guys, take a little quicker profits, get to a zero loss level just a bit faster. And I want you to see something. Let's pull back a little bit since that was kind of a big, whoa. Termination, textbook, right? No more long trades. Potential to break, but didn't write off. Still created an untradeable bounce. Termination reverses the market. Potential, a little bit of a bounce. Termination, potential, termination, 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 potential, big bounce, right to the termination, off it goes. So you have to know the difference between these, guys. You have to know the difference between it might break and it's broken, right? not broken. And if you go through, you're going to see this all day long, guys. I'm going to give you an awesome plan for the potential to break. But it's going to focus on having the momentum and making sure you have a low risk entry. So, if price reaches an area, where are my triggers? If they're below, no trades into that area. That feels pretty simple, doesn't it? You're going to have to study it, because this is where we get excited, hoping it's going to break. Small and large, get through the area. The area is broken. It acts as support, guys. Let's look to pinpoint an entry on a smaller, faster chart. Let's follow that clear path all the way to the next area. And then the most common, the one that you'll probably see more often than not, the potential to break, where the small smash through but the large are lagging, and that odds favorable momentum says, hey, if it's pretty, let's take a shot. And I will give you a rock solid plan to take these medium probability trades, guys. So is everyone good? You feeling all right? I hope so. You feel all right? Oh no? Not feeling too good myself? Let me drop this picture in the room for you just in case you want it. It's Friday. Smile, guys. Did you guys know that there will be times when your path is not clear because the areas are stacked a bit? There will be times when there are 4 or 5 lines in your way and that burning in your gut that says, oh my gosh, I'm never going to make money. This sucks. Support, support, support. Nexgen is full of beans. They put all those lines on the chart just to keep me out of trades. That's not true, guys. This is 90% of your day. 90% of your day is doing nothing. 90% of your day is literally sitting on your hands playing solitaire, hoping for these advantages to come together so that you can trade a pattern that's been proven to win more than it loses, guys. But it's okay. It's okay to do nothing. Futures markets trades billions with a capital B every day. You need $400 a day to put yourself in a 6-figure income, guys. 400, that's not a lot with what we do. It's not necessary to be in every move. Every tick is not your tick. Every dollar is not your dollar. My brother has this analogy and I like it. If you walk into the bank and you say, give me all the money, you're a bank robber. You're probably going to get tased and hogtied, right? But if you walk into the bank and you say, hey, give me my money, please. And what is my money? My money means that I had momentum, clear path in an entry area, that my rules were met, that my patterns were true. Guys, you're a customer and you're going to walk out with the money, right? So be cool, sitting on your hands doing nothing. Be okay. Rule number 2 gives you the ability to see where the driving forces of the market are likely to react, where they're going to make decisions, where they can fight each other, guys. And very often, rule number 2 is going to keep you out of this nasty chop that's taken everybody else's money that isn't following their plan, guys. Waiting for advantages. 90% of your day, waiting for advantages. I want you to see this. How awesome is it that for 2 hours you had absolutely nothing to do because rule number 2 wasn't met? And in the middle of the night, if you thought you were going to wake up and trade, they couldn't make their minds up, guys. Buyers and sellers couldn't pull their heads out of their asses. You don't have to get caught in their fight. You know exactly where it's most likely to happen, and then eventually they break out. Eventually there's opportunity. You just got to be patient and wait for that opportunity. It's coming. It's like a bus. Like a bus. So guys, that's rules 1 and 2. Large chart, big crowd, slow mover. Is everybody cool? Are you with me so far? Strength and momentum. Once you have these 2, the world is your oyster. Once you have strength and momentum and a clear path, look at this. Everything says down, the path is clear. Ron says, you know what? I'm going to make some money because making money is what I do. You will develop a plan, guys, that revolves around this, and your entry area will change. But for now, we're going to go to the smaller, faster chart. We're going to look for that high probability trend trade entry. We're going to say to ourselves, hey, you know what? It's time to pinpoint where the small crowd is most likely to fail. And if I go over there to do that, and I see this, 3 divergences, guys. 3 divergences in the same price range. 3 losses of momentum in the price range. 3 cyan lines from a low, 3 magenta lines from a high. I'm going to see how many different ways I can say it. Guys, this may terminate the trend. This is the only time that the small chart will ever override the advantages of the large chart. This is the only time on a small chart where rule number 2 isn't met and the path isn't clear. And what's happening here is your small chart is literally showing you the change that you can't see on the large chart. And when that large chart seems to turn from the middle of nowhere, very often there's 3 divergences on the small chart. So we use this and say, whoa, no more short trades. Don't get in on that pullback. That's not the best of the best. And if you did get in on the perfect one, guess what? This tells you, hey, it's time to manage. And it becomes even more powerful with weak triggers, that rule 1 lesson, and more powerful still if that final pivot is higher than the previous from a low or lower than the previous from a high, guys. So 3 divergences is the only time my path isn't clear. But if I go to that small chart, I don't see 3 divergences. Guys, I'm going to use a limit order to buy a pullback, that little push from the small crowd, and I'm going to buy or sell that pullback at an area. I'm going to use fibs, midbands, and yellow 1-to-1s, but I'm going to insist that they are inside of triggers, guys, because triggers are where the price is most likely to return. On the large chart, price is most likely to return to the large triggers. Let's see if we can find an example of that. Oh, look at that. It pulled right back to the large triggers. And it did it again right there. And it did it there. And they tried to do it there. And it did it right there. And it did it right there. Pretty cool, right? So, large chart, price is likely to close the gap to those large triggers. Small chart, price is likely to close the gap to those small triggers. Your large and synthetic triggers on the small chart are where price may return. Areas inside of those triggers, fibs, midbands, yellow 1-to-1s, that's where price is most likely to bounce. I expect these price bars to get to the triggers. I expect the areas inside of those triggers to create a bounce. So, when I look at my small chart, this is the thought process I want you guys to go through. And again, understanding this very basic concept is not only going to help you find entries, it's going to pay huge dividends in your management. The small chart price may retrace back to the large triggers. And I have 1-to-1s and fibs in there, guys. These might produce a bounce. But the price may also come back to the synthetic triggers. And I've got a mid-band that may produce a bounce. And I don't know where it's going to go from. Only thing I'm sure of is that price is likely to return to the triggers and that the areas inside are likely to produce a bounce. So I'm going to use these areas and create a window where the market is most likely to continue, where the small crowd is most likely to fail, guys. And this is all we're working on right now. Large chart says up, large chart has a clear path, large chart has momentum. Where on that small chart is the small crowd most likely to fail? They're most likely to fail at areas inside of those favorable large triggers. So we're going to go through the process. When everything says up on the large chart, right about here, your guts are going to tell you to jump in. Man, it's going without me. I have to take this trade. This is terrifying. I'm missing out. And a lot of you are going to jump in right about here. And you're going to say, with all that momentum, here I go. And then the small crowd shows up and gives a reversal bar, guys. And this happens a lot. And when they produce this reversal bar, that is not the entry for the highest probability trend trade. This signals the beginning of the fight. This is the beginning of the pullback. So at the time of the reversal bar, you're going to look for those favorable large triggers. You're going to look for the large. You're going to look for the synthetic, guys. And in a perfect world, they are overlapping one on top of the other. They are favorable. And what you're doing is you are defining exactly where price is most likely to return. And then you have to say to yourself, but those trigger lines aren't my entry. Mark said 1,000 times in class, my entry comes from an area, fibs, midbands, yellow 1-to-1s, inside of those triggers. So, price may come to this midband and it may bounce. Price may go to this 1-to-1 and it may bounce. So we have a window of opportunity. We've got a range where the small crowd is most likely to fail, where the market is most likely to continue, guys. And because of all of the advantages on the large chart, momentum and nothing to create a bounce, your limit order goes right at the top, right above that highest point of support, guys. And you're going to be able to activate this when the market is all the way up here, and you're going to sit on your hands and you're going to wait. And hopefully the small crowd gets to you. And if they do, you're in the highest probability trend trade long you can take. This is a trade that typically wins 70 to 80% of the time. Anything beyond the triggers, anything below the triggers. Hey, good morning, Miss Cindy. Happy Friday to you. Did your husband get the feedback? Did you high five him for me? He did a great job yesterday. Anything on the other side of these triggers, guys, anything below the bottom of the triggers, any line, this is not a part of the window. This is not where I want the market to be if this trade's going to be successful. Once you get below the triggers, you're in the place where the market should not go. This is going to pay dividends when we start managing trades, guys. So in a short trade, most important, large chart says down. Large chart has odds favorable momentum. Large chart has absolutely nothing in the way. I resist my temptation to just jump in, and I wait for the reversal bar that signals the beginning of the pullback. And I remind myself that the reversal bar is not the entry. And you know, I've included that in class because when I was teaching my wife this trade, every time she got a reversal bar, she went short. And I had to tell her, Jenny, you're doing it wrong. That didn't work out well. The reversal bar says look for those triggers, one on top of the other, overlapping, two snakes riding piggyback. And you have to say, I'm not getting short at the trigger lines. I'm waiting for the area inside. And guys, there's one line inside of these trigger lines. There's a mid band. My job is to activate a limit order a couple ticks below that mid band and hope the small crowd has it in them to give me an entry, to get me into the market with all those advantages. Anything on the wrong side of those triggers is not my entry. This is where the market shouldn't go, guys. And very often I see new users say, well, if it could go all the way up here, I'm going to put my entry all the way up here. Or there's lines up here, I'll put my entry up here, and that way I don't have to sit through anything if it doesn't just go all of a sudden. And guys, I'm telling you, this is not where you want to be. Yeah, wrong person to tell they may not be doing it. Absolutely, Jill. And you're going to use this concept, and this will be your first stop placement. So, when I have momentum, when I have a clear path, when I have an entry in an area inside of favorable large triggers, guys, this is the best of the best. And this is what I encourage you new users. Focus on this for 20 days. Learn how to pick out that best of the best. It may be sooner, but I want you to give yourself a little bit of time. Because once you can define where the market is most likely to continue, you can define where the market should not go. And that should not go spot is your first stop placement. Typically 4 or 5 ticks above those trigger lines, below those trigger lines. And guys, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. 20 to 30% of the time, this stop is going to get hit. 20 to 30% of the time, you're going to take a loss. Guys, this is a cost of doing business. This is buying supplies, paying rent, whatever you want to call it. Small losses are a very normal part of a positive equity curve. But the cool thing is more often than not, you're going to get a reversal bar in the direction of your trade. The small crowd on that small chart is going to say, hey, guess what, Sid? Everything said down and now we're going down. Or hey, guess what, Tracy? Everything's set up and now we're going up. Go ahead and move your stop 2 ticks above that reversal bar, 2 ticks below that reversal bar. Minimize your risk. And what you'll find is that it's not uncommon to have one of those darn 20 to 30%ers, but you only lose 30 or 40 bucks on it because of smart stop placement, guys. And that's really the high probability trend trade. And the goal is that every time you take a trade, you have momentum, you have a clear path, and you have an entry area. And if you do, you're putting yourself in the catbird seat. Life is good. And every time you deviate from this plan, every time you sacrifice advantages, you're not in the best of the best scenario. That's the best of the best scenario, guys. Pull back to an area inside of favorable large triggers. So I'm going to ask real quick, are you guys with me so far? The smart part's the one that eludes me. Me too, Tracy. Are you guys with me so far? Momentum leads the way, right? What a great advantage. Clear path, nothing to bounce off of. Let's take a little time to pinpoint entries because this is really the one that takes a little work. And you've got to develop trust to be able to buy a market when it seems like it's going down. But you got to remember, guys, that even though that small chart is going down, that large chart is screaming up. We're just taking fluctuations to find an entry. The best of the best entry is favorable large triggers. And this is why I teach this, guys. I give you the best case scenario for the brand new user because I want you to win as much as you possibly can. This is not always the look, guys. And to be honest with you, this is the look less often. This is the look that you're going to see a lot. This is what we call split triggers, or at least what I call split triggers. Why? Because the large and the synthetic are split. They're away from each other. This is where understanding the lesson that price returns to these triggers is going to pay huge dividends. This is where understanding that your stop has to go below these triggers is going to pay huge dividends because you're going to see this look and you're going to say, whoa, price could go here or price could go here and my stop has to go here, and man, that's a lot of risk. And it could bounce from here or it could bounce from here, but my stop is way down here. That's a lot of risk. Has anyone ever seen this look and thought, man, how do I decide? Should I go from here? Should I go from here? Guys, this is where the idea that a reversal bar establishes your risk pays dividends. This is where confirmation that the market is moving in the direction of your trade pays dividends. Because if I get a reversal bar in the direction of the trade, my stop goes 2 ticks below it, which means that I can enter at this highest area with a reversal bar and know exactly where my stop goes. It doesn't have to be way down here. But here's the deal. And man, this is a bugger when it happens, but it does happen. Is you're saying, I'm not going to miss this trade because it can go from here. The small crowd has no obligation to you, and it may do that. And one of the things about being a day trader and one of the things about being able to pinpoint bounce areas is sometimes you have to take the trade twice. Sometimes you're going to take a small loser and then get in and get the big winner. Sometimes you'll take 2 losers in a row. Doesn't happen as often, but it can happen. So when your entry isn't perfect, and this is where I say language pays dividends again. If my entry isn't perfect, it's okay to use a confirmation bar. So what constitutes a not perfect entry? I took a picture and dropped it in the room earlier as well. Split triggers is not a perfect entry. Was this it? Nope, that was a mistake I made earlier. No areas inside of the triggers is a less than perfect entry, guys. If everything on the large chart says go, but it's not perfect, sit tight. Maybe a confirmation bar is exactly what you need. And then you got to study. You got to go back. You got to recognize these. Even the path says commit these looks to memory so that they become easy. And this is what it looks like all together, guys. Strong triggers lead the way. Have to have the separation. Everything says up and it says up fast. Price has not reached trouble. Let's do a picture and a little lesson on this one. I'm going to show you the magic of these entries real quick. This top of the bar, this is where we're making decisions to take a trade. This is where we're waiting for the reversal bar. Look at how close I am to trouble. Man, I keep doing that. Guys, this is 8 ticks. 8 ticks. That's $80 of potential profit. Is anyone feeling like it's a good idea to risk $200 to make 80? Probably doesn't work out, right? That's nothing. Mark, how can I do this? There's those stupid lines. As long as we haven't hit it, it's not a termination. It is a target because we're going to wait for the pullback. And the pullback, whoops, is to the area inside of favorable large triggers. And suddenly that 8 ticks turns into almost 38 ticks. Because I waited for the area inside of favorable large triggers, my risk is reduced. Because I waited for the area inside of favorable large triggers, my profit potential is increased, guys. I told you about these tails. I said you'd be able to pinpoint where these tails are most likely to form. They're most likely to form at areas inside of favorable large triggers. We don't trade the tails, guys, but if we go back and study them when the rules are met, let's see if they line up with an entry. That's how you're going to develop trust. That's how you're going to get good at these trades. That's how you're going to get to where you want to be. Not so much from taking every trade that you think you see, but rather, let's see if we can find one of those tails. Let's see if we can get some rules met. How about this one right here? Everything says up, the area has the potential to break, and I circle a tail. Are you guys with me? And that was actually yesterday. So I'm going to go back to it. 1310. There's my tail. And it bounced right off support, right inside of triggers. How cool is that? That's a pretty neat pattern. Let's back up. Let's circle this tail. All I'm doing is getting a little pattern recognition under my belt here. Oh my gosh, look at that. Directly to resistance, right inside of those triggers. Didn't get above the triggers, but rather, it just continued down. And I know some of you took this trade yesterday. So once again, everybody sees it, right? We're going to piece these together. And here's the cool thing about that, is you guys sat tight in the consolidation, waited for the rules to be met, and got paid all the way to the fib. I love it when that happens. I believe this one had the potential to break. If I'm not mistaken, I remember looking at Pete's chart yesterday. You guys notice that there's several hours in between these highest probability trades, these best of the best trades, these holy crap, I can't believe it just came back to an area inside of favorable large triggers again trades, and down it goes. And you're getting paid, guys. Look at that. You had to wait 3 hours for the highest probability trend trade again. 3 hours. But if you did it, you're up $600 or $700. Life is good. That's what we're working on right now, guys. We're working on understanding how to find the best entry. So, to find the best entry, to be able to get this trade, guys, I got to commit some looks to memory. I've got to recognize momentum through strong triggers. I've got to understand weak triggers so I don't accidentally trade with those. I need to understand a clear path so there's nothing in my way, but I also have to understand termination conditions because, again, I don't want to give money away if my advantage isn't there. So this chart reading 101 tells you to take pictures of these. It tells you to annotate the charts, to talk about the whys, and that's that second tab here, guys. What strong triggers look like? That one was all caps. We'll click on it. Strong triggers is when the smalls are above the large, when the triggers are wide. That's odds favorable minimum. The rules are met. Look at that. That's my look, guys. That is always my look. No matter what chart I'm talking about, that's my look. And I don't ever want to confuse it for that look. Weak triggers. Anything can happen. Market reverse. So commit the two. Guys, this will take you 38 seconds to be comfortable with this look. But then you got to start talking about terminations and clear paths. So go take those pictures. Take pictures when all the triggers break, right? And just remind yourself, hey, in order for a path to be clear, both the small and the large have to get below it. And the path is clear until it reaches the next area, then the process starts again. And then even more importantly, because this is the most broken rule, define it. When price reaches an area and the triggers are below, sit on your hands. Rule 2 is not met. It's not a clear path. And then once you have those, you have everything you need. But you're going to turn them into high probability trend trades first, guys. So chart reading 101 is designed to get you to chart reading quickly. And it's been proven. If you do it, guys, what a great thing to do this weekend if you want to study. Go take 5 pictures of each, right? Don't overwhelm yourself. But you're going to walk away smarter. And as you take those pictures, use this. This is a termination that reversed the market. This is what we call a strong top or a strong bottom. This is the precursor to the highest probability trend trade you can take. There's the picture reminding you what momentum looks like and what weakness looks like, just so you can police yourself a little bit as you take those pictures. There's your termination. There's your clear path. There's that potential, right? Guys, potential doesn't guarantee results. I had a lot of potential in high school, never reached any of it. So make sure that everything's perfect. Where am I going short? Where does my order go? What am I waiting for? Where isn't my order going? Same thing for longs, guys. And then the second page, these are the words I want you to write on your chart every time you take a trade. I want you to talk about where the market is coming from, whether it was a strong top or a strong bottom. Learn this, commit it to memory, because you're going to need that to take the second trade. Talk about the momentum. Talk about it on both charts. Like, you need momentum on the large chart, but if you have it on the small chart too, isn't that like warm fuzzies? I think so. Talk about the path. Talk about your entry. And guys, I promise you, is if you use this language, my entry comes from an area inside of favorable large triggers. What you're going to find is that you stop taking trades from areas outside of triggers, and that's going to increase your likelihood of success. Print this out, put it on your desktop, make it a part of your day. And then finally, it takes you to your plan, guys. You're going to write your own plan. Until you are capable of doing that, I'm going to give you a plan. This is the KISS plan, the Keep It Simple Sunshine plan. And the KISS plan is a stepping stone in your learning journey. It's the first trade, not the only trade. This is the alpha. This is the one that gets it going. This is the trade that typically wins more than it loses. This is the trade that teaches you to read your indicators, that creates confidence through the memory of success, guys. And this KISS plan is designed to optimize your chances of success with the high probability trend trade. What does that mean? It means this is the best of the best, guys. And then through simulation, study, class feedback, continuous practice, work, you'll be empowered to craft a plan tailored to your personal goals based on your ability reading the indicators. That is an AI-generated fancy schmancy way of saying, guys, once you're a chart reader, you're going to find opportunity. Until you're a chart reader, you're going to hope for opportunity. So focus on learning to read the indicators. Give yourself a little bit of time to focus on this best of the best trade. And the simple plan for consistency: never fight the large chart. Don't fight the large chart. Don't fight the large chart momentum, guys. Don't trade into those large chart areas. Does it mean, Mark, I can't ever fight the large chart? No. There will be a time when you'll recognize patterns that win more than they lose that don't necessarily do that. But in the beginning, this is going to help keep you safe. This is going to help you focus on wins. This is what's going to keep you looking for the highest probability trend trade, guys. And then if all your rules are met, you're in. That's your entry. You should take a lot of pictures. You should know what it looks like, guys. And I put in what it looks like to have each of these on the checklist here. And then once you're in, that's where you guys just seize up on me. Because once you're in a trade, and it's not hard to find entries, I promise you, with a little bit of study, most of you will be able to pinpoint these entries quick. But once you're in, fear takes over. Once you're in, greed takes over. Once you're in, anxiety kicks in, guys, because now you have something to lose. And until you've developed a level of trust, guys, you're going to feel that. Your palms are going to be super sweaty and your heart's going to race and there's going to be butterflies in your stomach. So, your management as a brand new user in this KISS plan is very mechanical. It is very if-then. If this happens, then I do that. And those are the only options, guys. And the KISS plan management plan is designed to get you paid. It's designed to get you comfortable taking profits, getting out of the market, not hoping for home runs. And you will craft a plan tailored to your personal goals based on your experience reading the indicators. One of the signs of a mature trader is that they manage risk before they ever manage profits, guys. And you're managing risk. Let me do this. Let me pull out the cliches real quick. You're managing risk by insisting on odds favorable momentum, because you're putting yourself in a position where the market is likely to continue. You're managing risk by not trading into termination conditions because you're not putting yourself in a position where the market has the potential to have a giant bounce against you. You're managing risk through your amazing entries, through getting in where the market is most likely to continue rather than just arbitrarily jumping in, because it minimizes your risk, guys. So you've managed risk before you've ever moved your stop. And your stop initially goes where the market shouldn't. It goes above those trigger lines, 4 to 5 ticks. And if they come get you, whatever, that's it. Cost of doing business, it happens every day. But more often than not, you're going to get a reversal bar, guys. And that reversal bar will be your stop, your first stop movement. You will either get stopped out or you'll get a reversal bar. If I get a reversal bar, focus on the if, then my new stop is 2 ticks above it. My risk is reduced. The market's going in the direction that the momentum and clear path said it was going to go. And at this point, there is nothing else to do. Put your hands on your head. Put them under your butt. Pet the dog. High five yourself. Keep it in a perpetual high five, guys. You're either going to get stopped out of the trade for a smaller loss, or it's going to hit your first target. Your first target is designed to get you paid. If you're not stopped out, your first target is $100 away from your entry. Crude oil traders, very often your great entry is hitting your first target on the reversal bar that's going to have you minimizing your risk. Once that first target is hit, the $100 is in your account, guys. Your palms stop sweating, or at least they decrease. The butterflies start to go away. And you're paid. You're comfortable. You're happy. And you're going to move your stop to break even. This is your second stop movement. If I get paid at the first target, then I go to break even. Why? Because I don't want to lose. I don't want the fear of losing. I don't want the pressure of losing. I don't want the anxiety of losing, because my job is to hold for the second target in this KISS plan. And the whole reason I'm doing that is because my large chart said, hey, Mark, guess what? You're more likely to go down than up. You're more likely to push lower than to suddenly reverse and go higher. So my second target is $200 away from my entry, and I have absolutely nothing to lose. And guys, this is a $300 trade if it hits it. And you're out. You're done. There's no more. You are successful. You are, as the kids say, kind of a big deal, sort of a badass. You got in at the right spot, and you held strong to see if you got stopped out or reversal bar. And then you moved your stop, and you held out to see if you got paid or if you got stopped out. And then you got paid and you went break even. And you're either going to get stopped out or you're going to make that $300, guys. And $300, if that's the best you do each and every day, 1 high probability trend trade that goes the distance, 3 that gets hit for break even, guys, that's 75 grand a year. I don't think we usually think about in our professional lives. All right, I make $150,000 a year. How much do I make a day? You make $600 a day. Guys, that's going to become easy with a little bit of practice. 800 is going to become pretty easy with a little bit of practice. 900 puts you at $250,000 a year from 3 high probability trend trades that go the distance. And guys, that doesn't even factor in the medium probability trades. But if you're going to find success in the market, the one thing that you have to do is you have to know why you're going to enter and why you're going to exit. And I can't stress this enough. Rules are the patterns that have been proven to win more than they lose, ladies and gentlemen. Rules are the reason that you enter the trade. Not having rules met is the reason that you sit on your hands and do nothing. There's nothing worse than avoidable losses. Your process yields the results, guys. The results don't come from your desire to be rich. Your results don't come from your need to pay the mortgage. Your results don't come from anything other than trading the same thing every day because it's been proven to win more than it loses. And the rules help remove the emotion. And the emotion is real. But if I know and I trust that the pattern I'm trading wins more than it loses, guys, then that fear begins to go away, that they have to come get my stop rather than me just giving it up to them. So you have to know what it's going to take to get in and what it's going to take to get out, guys. And the one thing that I promise you guys each and every morning is that I'm going to give you everything that you need to be successful with the software. So right now in the room, you're getting the Word document versions of everything that I've just shared with you. The Chart Reading 101, you're getting the Word document version of that high probability trend trade checklist. You're getting the KISS plan, you're getting exit conditions, you're getting daily wins and losses percentages, and then you're also getting them all in PDF, just in case you don't have Microsoft. And the other thing that I gave you too is the PowerPoint in PDF form that I use every day to teach you guys every picture that you need, everything that I share. You have everything that you need to be successful with the software. The only thing that you don't have, ladies and gentlemen, is repetition. Repetition to trust that you shouldn't go short into this blue line because all the triggers are above it. Repetition to believe that without momentum, there's probably not a trade. And guys, what you're going to find is that with a little bit of study, you're going to find yourself in a pretty good position. You're going to be able to catch these moves. You're going to be able to see these trades. You're going to be able to talk out loud about these advantages. And again, the only thing that I can't give you is the experience. Some of you probably saw odds favorable momentum. Some of you decided that it was a clear path because we got above this fib. But guys, this is one of those 50-50 trades. The potential to break. Does everybody see that? And do you remember when we said that when the trigger lines are split, when there's that indecision, sometimes your best bet is confirmation rather than hope? Because you had an area here and you had an area up here floating between. A lot of indecision, guys. And you only have the potential to break. And it didn't break. And this is the one thing that I'm going to share with you. This is the second page of the KISS plan. And there's no doubt in my mind there's some people that took that trade in this room. That was one of those 50-50 trades. And I have to say to myself, when I have a 50-50 trade, dagnabbit self, that's not a clear path. You took it, Tracy, that's okay. This is a great lesson for you here. In the KISS plan, when we talk about optimizing your chances of success on this 50-50 trade, the first thing that it says is from a strong top or bottom. How come? Because a strong top or bottom was such an impactful termination condition that it reversed the market and gave you the odds favorable momentum that you need. And guys, when I told you that the large crowd makes decisions at these areas, very often, if that little reversal isn't coming from a key area, there's the potential, right, that the sellers are on their way to that next key area. So it reduces the likelihood that that area is going to break because there's the potential that they want to continue down. So my path isn't clear. My entry isn't clear because of the split triggers. And then this one didn't have divergence, but divergence is a killer too, guys. The 50-50 trade, while it's probably the trade you're going to see the most of, the 50-50 trade is the trade that is lost most often. And Tracy, what happens is we get real excited about momentum because momentum creates the potential to break. It really does. But you've got to learn to talk to yourself. It was only potential. And they're not coming from a strong bottom. And my entry isn't perfect. So that's a lot of problems on a medium probability trade. And it may still go up because look what it did. It pulled right to support and all of the triggers remained above. So we weren't going short yet. And guys, this is literally the fight that you see at key areas. They tried to get above. They pushed almost the exact same distance below. And now they're working their way above again. Key areas create challenges. So Tracy, I don't blame you for taking that trade. But one of the things that's going to elevate your chances of success is that strong top or bottom. That same lesson from the high probability trend trade. So awesome on you taking that one, because what it did is it opened the door for a lesson. And guys, that's exactly what the second half of class is going to be. It's going to be looking at the charts that you guys post, going back, talking about momentum, talking about the path, talking about the entry, and just asking ourselves, hey, was there a way to do it better? Was the chart read the right read, right? Is it just the weak bottom? That is the weak bottom, Tracy. So you already identified it. You're already in the process of saying, hey, wait a minute. And this look seems to get me more than when I'm not seeing. And you're absolutely right. This weak bottom says that this 50-50 is less likely to work. You knew it was a 50-50, and now you're incorporating that next piece. I love this chart because you know how to get into the market. And that's the one piece that would have bought you just a little bit of patience. And you will. And guys, that's repetition. Repetition creates recognition. I've got all these stupid little catchphrases that you're going to hear in your sleep. So what happens, Tracy, if you see it once, you're like, oh, there's a good lesson. And you're still going to break that rule 20, 50 times, right? But what's going to happen is you're going to post this picture in the room, and I'm going to say, all right, Tracy, there it is again. And you're going to be like, damn it, not again. And then we're going to go, all right, Tracy, there it is again. You'll be like, son of a gun, I keep missing that. And then you're going to post a picture in the room, Tracy, and there's no doubt in my mind, this is exactly where you're headed. And you're going to post this picture right here, and you're going to say, where's my call out? Weak bottom. Didn't get me this time. Rules not met. And you're going to be like, holy crap. The lesson just stuck. Right? And then that's one thing that you don't have to work on anymore because now it's second nature. Or you're going to say something if it is a strong bottom. Right? And you're going to say, well, it was a strong bottom, but my area isn't perfect. Look at all that potential risk on a stupid medium probability trade. I'm going to insist on a reversal bar. And Tracy, brother, you never got the reversal bar from the areas. And this is how it works, guys. This is how becoming good at this happens. Make every mistake, because the more pictures you take, the more annotations. So Tracy, your job is to take that picture, and I want you to drop it into your spreadsheet. And I want you to go right here. Watch those weak bottoms on 50-50 trades. Less likely to work. So now what you've done is you've taken the picture, you've gotten the feedback, you've annotated the charts, and you've taken the time to type out in your notes section exactly what the feedback was. And I'm telling you right now, guys, the act of typing this out creates a connection. It creates a connection with what just happened and what it means to you. This is why I am such a huge, huge, huge pain in your ass. Tell me what you see. Talk about what you see. Tell me why you did. And then, guys, once that challenge is identified, if there was one, either go back and re-annotate the chart, create the connection, or get that into your spreadsheet, because you're going to ask yourself what worked and what didn't work. And Tracy, eventually, what didn't work is weak bottoms on a 50-50 and not the best entry. And guys, that's the path. That is the educational path. That is exactly what we're doing here each and every day. And look at this. I've even got a whole document that says it. To minimize your learning curve, post pictures in the room. Post pictures of your trades in the room. Every trade, win, lose, or draw. And if you win and the rules are wrong, you might have a short-term victory, but a long-term failure. Guys, luck runs out when you go live. It's amazing how quickly the rules matter the second you put real money on it. But how are you going to know the difference? I don't expect you to know the difference. You're brand new. To be sure, you need feedback, guys. We're here to help. And if you place a trade on the simulator, you participate in class, there is no risk of loss or capital. You need someone to tell you what you did right or wrong when you're new, and this is part of the educational magic Nexgen offers new traders. So for you guys on demo right now, it's real important to me that you understand that I'm not turning you into a super trader, I'm turning you into a chart reader. But your participation, watching this class, seeing people posting these trades, taking these winners, my goal for you is that by the end of, I'd say by the third or fourth day, you're going to understand that the software is valid, that the methodology is sound, that the Fibonacci areas are 32 flavors of kick-ass. Now you just have to learn how to use the software, guys. I'm giving you the greatest elliptical ever. But if I don't haul my fat ass up there and get some work done, I'm going to stay fat, right? That's not momentum, even with a clear path. I have no areas inside of favorable large triggers. If you tried to go long, guess what? Avoidable loser. Take the picture, drop it in the room. Let's talk about why you were doomed from the get-go there. And guys, I'm going to go stretch for 5 minutes. I'm going to not be in my seat. I encourage you to do the same thing. When I come back, we're going to look at your pictures. We're going to talk about what you saw, what you did, how we can do it better, how you can read it better. And you guys are going to ask a whole bunch of questions. So I'll see you in 5 minutes, guys. Go stretch your legs. Anytime I take a break, I just kind of get quiet. Had to run off, get a quick snack. We all good? Awesome. I did. I take a break. See, this is how I know you're ignoring me. Because I said it 3 times. I'm going to go stretch my legs. That's okay, JK. We can fix us. We'll be good. Yeah, once we're done with the 101, I like to take a little break. I think sitting at your computer and staring at stuff too long, guys, it's not healthy. It's not good for your back or your butt. I'm going to go to the top of our chat box, guys, and I'm going to start clicking on the charts that you posted. And let's see what we did here. Jeffrey D, need a little technical help. Sorry, we got that one. Gino got us going this morning. I got to tell you, Gino, found your groove. So Gino says, check this out, everybody. When I have a weak top and it pulls all the way back to support and my trigger lines don't follow, Gino understands completely that price loves to return to the large triggers. And guys, this is what we call the gap theory. When there's a gap so big between price hitting an area and those large triggers that there's room for a full bar in there, guys, price is likely to return to those large triggers. And Gino says, I know that. Let me get in on the other side of these small triggers because it's a NASDAQ and the NASDAQ's kind of crazy. And let me make a little money on the way up to those triggers. And Gino, man, this is a great trade. I took the exact same trade, actually. I had a little HVA line there. And I got out right at the triggers. What a great shot. Awesome trade. And then it had a pretty good bounce off of it. And Gino said, you know what? When a termination condition stops the market, when the triggers roll, when I get one of these high volume area trades, I can take an opportunity here as well. And sure enough, Gino, you did it again. Nice job. Great trading this morning, dude. And there's a picture of Gino's trade with just a little more clarity, I think. High volume area, termination condition, triggers roll. Guys, this is a nice trade. There was the first one. There was the second one. Gino and I are synced up. Nice trading, Gino. And then Ron came in, and you know, Ron's the one that's going to remind you that when price clears and the path is clear and there's room to the next one and everything says down, the market's most likely to go down. And here's the best thing, guys, and I'm going to put Ron up on a pedestal since it's Friday. If you look at Ron's trades, 95% of them look exactly like this. 95% of them, and here's the big key, are about getting paid. About getting in and getting out with advantages and not necessarily waiting for the advantages to go away before he puts money in the bank, guys. And base hit. So if you've never seen it, your job this weekend is to go watch Moneyball. Have you guys seen Moneyball? I always ask that. If you've seen Moneyball, you know that the whole premise is get on base. And guys, if you've never seen Moneyball, go watch it and let that phrase ring in your head. Get on base. All right, Jen, what are you doing here? Jen says, hey, Mark, check this out. Everything is going down. I clear trouble. I agree, big dog. That's one of my favorite movies. Everything's going down. She says, you know what? Decisions are made at key areas. So why on earth would I want my price bars to be right on top of the areas? So she says, let me get the price bars below the areas. And then what's to do? I'm going to go short. And my goal is to get paid, but there's nothing in the way. So once I get below the next potential bounce point, I'm going to do it again. Jen, absolutely outstanding. And guys, let me give you a little perspective. All of this lasted 9 minutes. And inside of 9 minutes, that's a 2 lot for, oh, that one got you a little quick. So that's 80, that's $100. And then that's another 240, I believe. Guys, almost $300 or so. Almost probably over 300 because my math sucks. I was an English major. In 9 minutes. Aw, Jen, you're so sweet. Let that resonate. 9 minutes. You don't have to be in every move, guys. Wait for the perfect move. Wait for the best move. Jen, you're going to have to introduce me to your teacher because they're freaking amazing for you to catch trades like this. I want to get into their class. Always learning, right? Am I the only one? I am always learning. I can't wait to learn. I get excited about learning. As much as I teach, I prefer to learn. Let's see what we have here. Who is this? This was Pete. Pete says, Mark, you probably saw this thing going around on crude oil. Will everybody let the area clear and then traded short? And then those weak triggers, and Pete says, man, I'm on the wrong side. I'm going to get out. Nicely done, Pete. And Pete, I tell you what, man, I'm going to stick to my guns on this one. If momentum is what gets you in, I like that close on the wrong side, but you give it a little breathing room. Great job. Sometimes it's worth it to give a little bit back. Nicely done, Pete. Consistent, consistent, consistent. And there's the entry. There's the first one. Everything says down. Guys, this is a momentum trade. And Pete, they just got you. It was a little tight. You had 2 chances. They got the second one. And then there's the second one right there. And just absolutely beautiful, Pete. Great trading. Knowledge does not take up space. I like that, Cindy. Knowledge does not take up space. That would explain things because I've got so much space taken up from the stupid, I need to replace it with the knowledge. It's a Spanish phrase. I like that. All right. Who is this? Gino. All right, guys. I'm going to tell you something. And man, this comes from a place of love. And forgive me if this chaps anyone's ass. This is the most bullshit stuff to ever write on a chart. What does this do? This beats us up mentally. I'm a loser. I took a loser. I suck. This is crap. I can't stand this. What the hell? Guys, that doesn't do anything for you. How about if we did this? I had no momentum. Hold on. I had no clear path. I probably shouldn't have entered. I'll do better next time. Guys, language is so important, especially the language that you say to yourself when something goes wrong. Don't waste your time beating yourself up. It's done. It's over, right? You didn't have momentum. There's absolutely no clear path. Hell, there's not even areas inside of favorable large triggers. And let me show you guys something else here. And Gino, I'm just using yours for an example because here it is. Term, 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 term. Rule number 2 has defined the consolidation, the areas that you need to break out of. Does that make sense, everybody? And forgive me if that seemed a little harsh. This does nothing. There's zero value in typing loser unless you go through why. What went wrong? Where did my analysis go wrong, guys? Just throwing that out there. Tracy. Dun, 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 dun. 50-50, clear path, divergence, and a bad top. And price didn't come back. Did it end up dropping from there, Tracy? I see you're on gold. Did it go down from short of the areas? Yeah. Tracy, I don't tell people how to trade. I struggle with gold. It's a little indecisive. But the one thing that I can point out, and this is probably a good lesson for everybody, this mid-band, as price is coming up, the mid-band, because it's a moving average, will actually work its way down. And it's not uncommon at all to, if you have, like if my entry is, that's the wrong line, sorry. So if my entry, and just hypothetically, I've got it a couple ticks below that mid-band, as price comes up, the mid-band comes down. Do you kind of see the relationship there? So it's not uncommon for me to have to take that sell limit and drop a tick, right? And drop a tick and kind of chase it. And I didn't learn that until way late in the game, because it may drop 3 or 4 ticks before I get to it. And notice how you're 1 tick below rather than 2. And this is also one of those opportunities, split triggers. Take the reversal bar. Little confirmation. Good picture though. Tracy, you're spot on your reads. I want to make sure that I say that. You're spot on the way you're reading charts right now. You know exactly what you're looking for, and you know exactly where you should be entering. And you're killing it. All right, Jeffrey Dean. Let's see. Saw the intersection of the mid, large and synth come together, set the limit at a few dollars. So let's look at the whole picture. Mid-band held from a bad bottom. Small triggers are coming down strong. So the small triggers agree. All right. Why so much risk? Why $120 worth of risk? Especially after a reversal bar. I like this trade very much, Jeffrey. This is one of those things. Check this out. Reversal bar in the direction of the trend. Oh, no worries, Jen. You get your reversal bar. That 28 can be literally 19, 30 bucks worth of risk. Does that make sense, Jeffrey? I love this trade. You've got momentum on the range chart. You're coming off the termination. This is super strong. You take the perfect pullback, and just at that point, to hell with that risk, especially with that market flow signal too. Great look, dude. Nice job. I don't think I've ever seen that trade out of you. I dig it. Guys, that's just one of those things when you learn to read it. And then Tracy, we talked about this one, right? Maybe 50-50. Not a strong bottom. So Tracy, this is still a weak bottom, because it's not a termination that reversed it. And then we have the potential to break. And this is, oh, look at this. I think everybody's on December oil, Kurt. They should be by now. All right, Tracy, here comes your next great lesson. For a high probability trend trade, odds favor momentum, clear path, 3 divergence. 3 divergence is the deal breaker. Kurt, MCL is a different market than CL. MCL is not CL. MCL and crude oil are completely different. Completely different. Trading at 68.61, Pete, on the December contract. All right, guys, this is your good lesson for today. For a medium probability trend trade, 50-50, one divergence can kill it. 2 is kiss of death, usually. 3 is right out. And guys, this is why repetition really, really is key, because you recognize the momentum. You knew that it was a 50-50, and then what happened, Tracy, is you confused the entry rules for a 50-50 with the entry rules for a high probability trend trade. 1 divergence is usually pretty problematic. 2 divergences is typically very problematic. Does that make sense? Cool. I love these lessons that we're given today, and that's one of the reasons that I give this every morning, guys. If you're in the high probability, right, you have to know what it takes to get you in and also what it takes to get you out. And then if you're in that 50-50, it's a different set of rules. And what happens a lot of the times, and I did this earlier this week, is when you start focusing on a couple different things, it's normal to confuse the rules between the two. It's normal to say, all right, it's starting to look, well, that's just a termination, right? But that weak bottom, and you've got to play that into the factor, right? And you're kind of doing all these things all at once, and it takes a minute. And I like to say that a lot, guys. I really like to stress that a lot, that it's cool to not be perfect right off. It's okay to not be perfect. Does everybody see that it's a termination condition? And if you mistaked it with a 50-50, maybe that divergence is enough to help out. And if the split triggers didn't give you red flags, right? It's just compounding. The momentum is the only thing that I have going for this trade right now. That's it. And then you see how it's coming from a bad bottom once again? Remember that bad bottom, Tracy? Possibly looking for the fibs? It is. Why? Why is it a no-go? And let's go back to this one. And Tracy, you're like, shit, Mark does everything he can to keep me out of trades. In the beginning, we're going to optimize your chances of success. Not because I say so. Not at all. Don't ever do anything because I say so. Let me give you a set of rules. Go back and back test them and say, oh my gosh, this guy's smarter than he looks. So the 50-50 is the most broken, it's the most lost trade with new users. It really is. And I'm gonna break it down like this. And I think I did this yesterday, and I'm probably gonna do this tomorrow, even though you guys won't be here. So this is a high probability trend trade. All indicators on all charts agree. This is the best of the best. This is what we teach every morning, right? And I say, let's learn to talk in terms of advantages. Let's learn to say to ourselves, I have momentum. My path is clear. My entry area is perfect. Let's take a trade. And there's a reason that I do that. And then the second trade, the medium probability trade. Most indicators agree, but an issue exists. Notice that issue is single. An issue, not some issues, but rather an issue. So on the 50-50 trade, I'm going to do this. That is instantly gone. 33% of my advantages are gone the second that path isn't clear. Are you guys following me so far? So Tracy, doesn't it stand to reason that I want the best look of momentum. That's why we say that the 50-50 has to have that odds favorable momentum on the large chart. I have to have large chart odds favorable momentum. That's imperative to me. And then this is where the lesson, do you know how the small chart can show change, Tracy? The small chart kind of starts to show us those things that we don't see on the large chart. So your small chart has told you twice, Tracy, we're losing momentum and you don't have a clear path. Tracy, we've just lost momentum again and you still don't have a clear path. And the way your brain's going to start registering that is, hold on, that momentum's going away. The small chart's telling me. And that's another 33% of your advantage is gone, right? So if I don't have a clear path and I can visually see that I'm losing momentum through divergence, I better have the best entry area ever. Doesn't that make sense? Like, it's 66% gone. And to be honest, for me, Tracy, and I can't tell you how to trade, if I'm losing 2/3 of what makes a trade great for me, I'm probably going to be cool just sitting on my hands and saying, you know what? Having an entry area isn't enough when the path isn't clear and I can see that the momentum is going away. And that is why, my friend, that when we talk about 50-50 trades, I say divergence is one of the biggest killers of it. And there's a 50-50 at 752. Whoops, I went right past it. Oh man, and look at that. That one had 3 divergences. Egads. Let's find another one. Not a lot of 50-50s. The fibs have been holding pretty amazingly. So let's go back to 11-12 and let's see. And guys, this is how I created the KISS plan, just so you know. I took the high probability trend trade that my brother taught me. And look at that. That one didn't have divergence. Potential to break. This one actually didn't have divergence. And if I'm not mistaken, a lot of people took this trade and lost it. Because, Tracy, this was a great look. Strong top, odds favorable, potential to break, no divergence. But it's still just a 50-50. But I literally went back and I said, man, why do I keep losing this potential to break look? Why do I keep losing? And you're absolutely right, Tracy. The 50-50 happens a lot. There it is again. No divergence. Beautiful. Divergence prints, whips its ass. And Tracy, the 50-50 will be most of your trades. But do you remember the idea? How many trades do you think you need a day? And guys, let's talk about this real quick before we go to the next picture. How many trades do you think that you need a day to make $400 a day? How many times do you think you have to be right to make $400 a day? You feel like you could do it 4 trades, maybe 2 or 3? Then why do you already have 17 trades today? Why are you trying to catch every move? When if you're just patient, you can catch the right move. And sometimes it's, and Tracy, this was my thing, and you may identify with this comment because of swing shift. Sometimes I felt like, okay, nothing set up in the pre-market, and then I spent 3 hours in the classroom, and now I have to make something happen before I run out of time. Has anyone ever tried to make something happen before you run out of time? I most certainly have. Has anyone said, I've got to find these moves because there might not be another trade in the futures markets? Ever. There is such a likelihood that the S&P is going to stop cold and quit moving, and I missed my window as a day trader. And now I'm going to have to go be a Walmart greeter because let's face it, the tattoo industry is not booming anymore. What the hell else am I going to do? I'm not going to be a professional golfer, that's for sure. But guys, look at all this movement over the last 7 days. Part of learning patience is believing that your next trade is coming. It's believing that just because it didn't set up perfect here, it still has the potential to set up. Looks like Gary's chart. So I hate. And guys, I don't hate a lot of things. It's typically Nazis and third world hunger. But I hate taking the wrong trade because I forget sometimes that the right trade is coming. I forget sometimes that the market trades billions of dollars. I forget sometimes that I don't have to be in every move, that my job is to be in the best move. And the more I remember it, the easier it is for me to sit on my hands and do nothing when it's not perfect. And I know I sit here and I say it like, oh yeah, of course, right? But it takes a while to get to that point. It takes a while to develop that trust. It really does. And Red Eye, welcome to the room. Odds favorable, potential to break, straight from a strong bottom, absolutely no divergence. And holy crap, what an easy trade to take. And Tracy, everybody in the room, that's the best look ever for a 50-50. Wayne, odds favorable, potential to break. You take it at the mid band, even with the divergence. And you get paid at your 36. And then you take it all the way down. What a great trade, Wayne. Freaking outstanding. And then Tracy, let me say this, because right now you're saying, but Mark, there was divergence. The hell is Wayne thinking? There was divergence. Divergence kills these trades. Guys, you'll create your own plan based on your ability reading the indicators. You'll create your own plan based on your pain tolerances. I know, Tracy. Guess what? That's not your trade, is it? That's not your entry. That's not your condition. This is Wayne, and I know Wayne. Wayne had something going on another chart probably that supported this trade. But guys, this is where you're going. Entry on market flow. I knew it. I knew it. So Tracy, when you see this, don't think that Wayne's doing it wrong. Say to yourself, right now I'm learning these little intricacies. I'm learning these little nuances. That's not my trade, but bet your bottom dollar it will be once you develop a plan that revolves around the experience that you have. And Wayne's just got a little more than you. Andy Man. Oh, Andy. You ready? This is common, guys. Dang it. That's a 50-50, right? Does everybody see that 50-50? Smalls above, large below? I want to make sure you guys are seeing this with me. 50-50, right? Odds favorable momentum? Okay. 50-50, right? Odds favorable from a strong bottom? What's this one, though? What's it mean when price reaches a divergence high and none of the triggers break? Help me out, guys. That's a 50-50 potential to break. That's a 50-50 potential to break. What is this? That's a termination. Just want to make sure that I'm reading it right. If I was looking to trade the 50-50, that's my confirmation bar. Is everybody with me? If I'm looking to trade to 50-50, that's my 50-50 entry. That's my confirmation bar. That gives me room to trouble. Does that make sense, everybody? Andy, I love that you made money on this trade. You traded directly into a termination condition from the wrong side of the triggers on its way back to probably producing a trend trade, and you sucked a little out of it right there. And still amazed at this PSO right to the tick prior divergence. And guys, one of the things that I do, and I'm not going to apologize for it. If you get lucky, I'm going to go, man, you probably got lucky on this one. And Andy, you probably got lucky on this one. You're on the wrong side of the momentum indicators. You're directly into a termination condition. Guys, give yourself room to the target. Give yourself a little bit of room to make money. There's just no room. You had $80 worth of room to get to trouble. And I don't know if Andy's in here, but guys, that's a great lesson. What's up, Calf? That is a great lesson. And Andy's an outstanding trader. But there's a point where I just say, man, that's just not enough room. Sakshi, good morning. Let's see. Strong triggers down. All right. So Sakshi, we're going to have fun with this one. You feeling okay? Because we're going to do some lessons on this one. And I love this. So when I talk strong triggers, I'm just going to put odds favorable minimum so I have room to type. Smalls outside of the large, like open scissors. Scissor. So what you have, Sakshi, is weak triggers. The smalls are back inside. Strength looks like this. Weakness looks like this. Does that make sense, everybody in the room? This is why annotation is key, because what this does, guys, is it tells me, hey, maybe we need to talk about this a little bit. Let me make sure Sakshi's cool with the momentum, like that one. And then, since the trigger line turned red, looking for entry on the 5-2. So you're saying since the fib turned red, Sakshi, you want to go short. But Sakshi, let me see if, do I have one on here? I want you to see, and you're absolutely right. The area is clear. You do have a clear path. And you don't have momentum. So let's go back to this picture and see where we're at with it. Let me get rid of all these. So we do have the clear path. And we do not have momentum. So this is where I say, you know what? Let's make sure that my area is pretty solid. Let me make sure that I have areas inside of triggers. And actually you don't. What you have here, and let's make your entry bigger. What you have here is an area on the wrong side of the triggers. Price is likely to return to these triggers right here. That's not a box, that's a call out, sorry. Get off of there. Price is likely to return to the triggers. And price has already returned to the triggers. It's inside of the triggers. And this area might stop the market, right? But once I'm on the wrong side of the triggers, it might stop here, it might stop here, it might stop here. Great question. When I say wrong side of the triggers, my Ninja Trader died. I'll come back to it. If you have listened to my mornings, and this is a great example of it. If you've listened to the entry rules, when we talk about them each and every morning, pull back to an area inside of favorable large triggers, what you're going to realize is that trigger lines are exactly where I expect price to return. Does that make sense? Whoops, sorry. Since I died, I have to reconnect. Let me pull that picture back up. And let me turn this into a picture because this is the best example ever of exactly what I'm talking about. So this pink bar, Sakshi, I expect price to come to the top of these triggers because price returns to triggers. Can everybody give me a Y in the room? We're talking entry rules right now for trend trades. Price may return to these triggers. Sakshi, my hope is that price bounces off of an area inside of triggers. So the triggers are where price may return. The area inside is where I expect the bounce. Has anyone ever thrown a ball at a wall as hard as you could? The area inside of triggers is the wall. That's where we expect the bounce. So Sakshi, in this particular trade, if you've listened to the management, everybody, your initial stop is on the other side of the triggers where price may return. This is what I call the wrong side of the triggers. Does that make sense, Sakshi? Why is it the wrong side? Because it's on the wrong side of where the market may return. It's on the wrong side of where I expect it to bounce. And once you get to the other side of these triggers, Exhibit A, there's just no telling where it's going to bounce. This is one of the reasons why, and guys, I say it all the time, one of the reasons that I believe language is very, very important. And if you start saying areas inside of favorable large triggers, what happens is it keeps you focused on the absolute best of the best. Keeps you focused on the absolute best of the best. So maybe we can go find an example of that somewhere. There's a good one right there. So check this out, Sakshi. Hypothetically, if I'm looking for a long trade, do you see how my area is on the wrong side of the triggers? And it doesn't stop until it hits the fib all the way down here? This is where language pays dividends. This is where language gives you the best of the best. Because right now I have to say my smalls are below the large. I don't have momentum up. I'm not even in an uptrend. My large chart's saying not yet. Great picture, Sakshi, and I think there was a great lesson there. How did that trade turn out? Just curious. Had to manage the trade and close it early. All right. I want to talk about the positive, though, too, of this one. One of the things that I do like about it, everything is below resistance, right? Which means that if price returns to resistance, resistance has the potential to stop the market. So what I do in a situation like this, actually, is rather than just jumping in on the wrong side, this is where I might say, hey, you know what? Give me one of those confirmation bars from the area that may stop the market. At least then I have a place to put my risk. Does that make sense? Large chart, everything suggested it was going to go down, and the exact same thing happened right here. It's a good look. It's a good read. But there's just enough wrong that I might wait for a confirmation bar. Good stuff. Thanks for posting. Guys, this is how you get to where you want to be. Just post. All right, Wayne. Termination. Everything says down. Dude, that's not one up, one down. That's two up, brother. That's two up. before it went down, isn't it? Just making sure. So let's look at it. Termination, momentum, clear path, pull back to resistance, right at the triggers. That's your entry, brother. And if you're not sure about it, use the confirmation bar. You get in a little better. I still like it because you got nothing but room to trouble. And you get out at trouble. And then you hold because of the momentum and you get out at second trouble. It's a beautiful trade. When I see these things, I always go and I look at what was written on the chart. I'll do it with clear paths. I'll do it with momentum. I'll even do it with basic math. Great trade though. I think that the easiest trade was right here. Let me show you something on this one. This is kind of cool. So this entry right here at the small triggers, just to toot my own horn, this is from 2004, Wayne. Check it out. Termination, sell the pullback to the small triggers. That's exactly what you just did, just a shade late. We started teaching this one in 2004. It's a great look. You nailed it. Let me open it up real quick. When I crashed, actually, I didn't have it open. So let me get my crude oil open. Let's do a live chart read. And remember, we're going to talk about momentum. And we're going to talk about clear path. So small's below the large. Larger beginning to wide. I have momentum. Price reached a divergence low. None of my triggers have broken. I don't have a clear path yet. Until my small triggers break below 47, I'm at a termination condition. If my small triggers break below 47, I have the potential to break, but I won't be broken until my large triggers come through. So what am I looking at? Termination with momentum coming from textbook strong top. Is that what you read? If the small triggers break 47, I have the potential to go lower. Until they break, I refuse to even look left. I refuse to look at my small chart. I'm not going to do it. Can't make me. Uh-oh. Here we go. Let's check it out. Where am I coming from? I'm coming from a strong top, a termination, reverse the market. I've got odds favorable momentum, and I have the potential to break. So my KISS plan says, if I get a reversal bar, I need to find areas inside of triggers. Well, right now, price may return to the bottom of the trigger here or the top of the trigger here. The areas that may create a bounce are somewhere right in here. And my stop would have to go about right there. That's my read, Sakshi. What would keep me out of this trade? What's the biggest killer of 50-50 trades, ladies and gentlemen? Do you remember? What's the one thing that I have to make sure is not true? Divergence. And if divergence prints, this doesn't fit the KISS plan. If divergence doesn't print, I can sell from the low level and accept the ginormous risk, or I could go from the higher level and accept the ginormous risk because my entry isn't perfect, or I could say something clever like, hey, I'll wait for a reversal bar from the key area because it's just not perfect. And that's exactly how that works. So I'm going to leave you guys with it. Some of you will take it, some of you won't, some of you will miss it, some of you will just question it for days. When I come back, we'll finish up the room, guys, but my dog needs to pee, so I'll be back in just a second. It's going to be muted, JK. Log out. Guys, remember, the further these smash through, the better the likelihood. So I'm going to scroll up. We still have pictures going on. We'll see how that one happens. We'll see what happens with it. Jen. Let's open it up. And Jen, now that I have the super fast computer, this doesn't really mess things up. So check it out. Price clears the back. Jen says, hey, let's go. 68.48, 68.48. She's in on this bar right here that clears. Everything says down. And it made it to, oh my gosh, $130 worth of profit. And you didn't believe it. And you turned $130 into 50. And guys, one of the things about these jump in momentum trades, Jen, your exit's great. Loss of momentum, right? Small win. One of my favorite phrases, get on base. Base hit. Guys, understand which trades are the big moves and understand which trades have the potential to be the small moves, right? And if everything is down, and Jen, we're just going to go through because I see things sometimes. Is that crazy strong momentum? Not really, right? I kind of teach every morning that's anything can happen triggers. And that's starting to be, but if this is anything can happen, that's all the more reason to take quick profits, right? Now, if this were like cranking, giddy up, holy smokes, look at the separation, I can't believe how wonderful this is. Yeah, maybe we start looking for next areas. But if it's not just the sexiest momentum that you've ever laid eyes on, get paid. Get paid. Because I'm telling you, it feels good to take a $110 winner on a 4 lot. It does, because it takes 6 seconds. And guys, this is one of those things. I got to know what I'm up against so I know how to manage it. Jen, it's a beautiful trade. But I'm just, one of the things that I noticed there. And guys, what happens is I start pointing out these things that I notice, and then you hear me in your head, and everything kind of works better. You're great. Don't feel like I'm beating you up. I'm not. All right, Cindy. Directly into a termination condition on the NASDAQ. 100% termination condition on the NASDAQ. No, you don't get to beat yourself up. If I'm not beating you up, you got to assume that everything's cool. Do you know what you didn't write on this chart? Termination. Termination. Traded into a termination. You should write that, Cindy. Price reached. Don't put magenta holding price. Put price reached, triggers below, termination, shouldn't have gone long. Because what happens, and I promise you, because this was the problem that I had to fix. When this happened, I have to say out loud, as I'm looking for this entry, I have to say out loud, price reached the area, triggers didn't break. And then I have to say out loud, termination condition. And then it's hard to hit cap. There we go. And then Cindy, let's go to the next step on this one, okay? Because I know that that's kind of your challenge right now is those damn termination conditions. But let's take it a step further. If I say to myself, this is a termination condition, my path isn't clear, oh my gosh, this isn't the best of the best, let me make sure I've got some momentum. And I do. Let me make sure I have momentum. I do. Let me make sure that I've got a very defined entry. I do, right? It's not perfect. There's no divergence. I'll take that trade anyway. But Cindy, because you know it's trouble, when you get back to this fib, when this divergence prints, don't give money back. Why do I implant a divergence on a 50-50? To keep you out of trades. I know, it's hope, Cindy. And this is one of those ones, I'm not mad at you for taking the trade. But I think that once, it's too much hope. I know, Joe. I do. I keep you out of trades with it. You're hoping that this breaks, right? You're hoping that divergence isn't a giant red flag. You're hoping it still goes up from the wrong side of the triggers. There's a lot of hope there. You're too smart to hope that much. What a great lesson. Thank you for sharing that. And thank you for being willing to post a loser, right? It's not easy to post losers. Not easy to post losers. Didn't quite reach the 1-to-1 there, right? Didn't quite reach it there, which means that on a pullback to the area inside of triggers, you've got room to get back to trouble, right, Cindy? Do you see the difference? Oh. Difference of one damn tick. You went from no probability to medium probability. Perfect entry, beautiful stop placement, wonderful recognition of where trouble was. No need for hope on this one. I love it. That's the redemption trade. And guys, one of the things that you don't realize, we're all going to make mistakes. Everybody in this room is going to make mistakes. Everybody's going to have a lapse of judgment. Everybody's going to do something wrong. I'm going to go hippie on you real quick because it's Friday. Guys, this is why you have to celebrate your victories. This is why you can't dwell on what went wrong, right? Don't worry about it. Cindy, who cares? We know how to fix it. But this proves that you know how to do it. This proves that you have the ability to be consistent. This absolutely, positively seals the deal that you have what it takes to be a successful trader. And all you're doing right now is just eliminating some of the small mistakes that are taking that success from you. And guys, celebrate your victories. Celebrate your amazing chart reads. If you take a loser that had everything, celebrate that you followed your plan. I don't think traders celebrate enough. I think we get too focused on whipping our own butts that we forget. Let's see. Everything. Just a good example of how sticking to your rules keeps you out of bad trades. So everything said down but the large triggers. There's that magic word, guys. Let me show you my butt. Everything said down but. How can you even put those together, Pete? Everything. Everything was clear on my physical except the blockage in my heart, right? That's not everything. And guys, this is exactly where following your rules pays dividends. The large triggers were up, the small triggers were down. You could have taken a shot at it to see if it continued. You would have had to manage out of it. But you didn't enter because synthetics never rolled. I love this. I say this too, by the way, everything but. Everything but. 60% of the time, guys, it works every time. Pete, this is the Sex Panther trade. 60% of the time, it works every time. All right, Haji. White bar-ish. HVA-ish. Price to go below 121's cause. Price was moving slow and consolidating. After target 1 kept it real tight. All right, so for the white bar trade, the first thing that has to happen is a termination on the large chart that none of the triggers break through. So we didn't have that. Sorry, Haji. Was this Haji or Muser? This was Haji. So guys, anytime I know that you're learning something new, I'm going to be real adamant about talking about the rules. And for that white bar trade that you guys love, and guys, it's a white bar trade that I love too. The first thing that has to happen is the large chart has to have a termination condition. The large chart has to have a no triggers through termination. And we didn't. So rule number 1 broken. Sorry. Ish. That's like saying, Haji, I almost didn't get herpes. Damn, I was so close. What, Cindy? Ish. Ish is not a trading term. So broke the rules. That's okay. Let's do the chart read, right? 3 divergences in the same price range. I like it. Perhaps 3 divergences was letting us know that this was a little overrun. Let's do the benefit of the doubt. I like it. Large triggers roll on the small chart. I like it. Smalls get below the large. I like it. They're angled down. I like it. So when it's ish, don't let ish be your reasoning. Talk about what you see. I had weak triggers that overran a fib. I had 3 divergences kind of confirming that it may be overrun. I waited for my large triggers to roll because that's kind of a good sign. My small triggers are below, so I have momentum down. I didn't trade directly into 1-to-1s because 1-to-1s can screw up my good time. So what I did is I let the bar work its way down with a market that said down, with triggers that said down, with triggers that said down, and I took the entry. And I love this trade, Mike. But this is where I'm getting on a high horse with language. There are no ish trades, right? You're just stuck in consolidation right now, and you're waiting for the breakout. And that's exactly what you recognized. And that's just, they're like, we want to go down, we want to go down, we want to go down. And eventually they did. Does that make sense? Term versus divergence. Got you. I got you, Sid. Okay, let me see if I can find one where we get a little bit of both. I know there was a great one yesterday. Dun, 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 maybe. Hold on. We used yesterday as an example somewhere in here. There we go. This is the one that I used yesterday. So, here comes your lesson, Sid. I'm going to go just like this and make it really big. And Sid, if you want to share your lesson with the rest of the class, that's cool. I'm going to tell them to listen in too. And I'm going to do a couple things. The first thing I'm going to do is I want to define a pivot. When price goes up and then down, or price goes down and then up, that's a pivot. Is everybody good with that? Pivot doesn't mean anything. It just means that the market went up to down, down to up. That's cool. So if there is a loss of momentum at a pivot, and I'm going to draw this out a little bit, what this blue line coming off of that pivot means is that price made it all the way down to here. However, momentum, and this is calculated in the background, guys, you'll never see the momentum indicator, maybe only made it to there. So what happens is when price goes up about 2 bars, your software does this calculation and that line prints. And what I know is that divergence is a loss of momentum at a pivot. Is everybody with me so far? That's all it is. It just means that I lost a little momentum. It's not a termination. It doesn't mean it's the end of the world. Things aren't so bad. I can just visually see that the sellers are, the momentum's not keeping up with the price. And then here, Sid, we're going to go back to rule number 2. Price reaches the area. You remember that lesson? Price reaches an area. In this case, it's the divergence low. Triggers don't break. now it's a term. And it took it 5 hours to become a termination condition. So here it's just a loss of momentum. But what this loss of momentum means is that the sellers were pushing down, right? And right at this very spot, right at this exact price, the buyer said, hey, sellers, no, we want to go up. Not only are we going to take all of your momentum from you, but we're going to draw this really easy to locate line in the sand. And what this line in the sand means is that if you guys go drinking, get a little wound up, right, and you come back to that area, we might let you think that you're going to win. We'll let you get a few ticks past. And then we're going to unload everything we have on you. And this is what we call a pivot stop out. So it's a termination, and very often the buyers will let them get a couple ticks below and then unleash hell's fury, guys. And a pivot stop out is a very powerful termination condition. And it becomes even more powerful if it happens right at Fibonacci support or resistance. And you see this a lot. This one's just a pivot, right? It never made it to the termination, creates the pivot, steals the momentum, and look at it happens again. I love it. And this is a pretty common, well, what's the difference between a pivot and a pivot stop out, Mark? Right? There's a pivot, there's a pivot, there's a pivot. There's a pivot stop out. There it is behaving as a termination condition. There it is behaving at a termination condition right at Fibonacci resistance, right at Fibonacci resistance. And that's what set off the move down. Great question, Sid. Thank you for asking that. Everybody wonders that. Not everybody has the courage to ask, so thank you for that. Joel. Dang termination. Dag nabbit. And then, Joel, there's that 50-50 from a strong top, if you were so inclined, but you're absolutely right. Pump the brakes. There's a big, ugly line there. All right, Sakshi. Everything says down. Life is good. Absolutely beautiful. Entry at the mid-band. And Sakshi, I want you to use that language. Entry at the area. And this one's floating in between triggers. I love this entry because your stop has to go up here. You know exactly where your risk is. Who cares if it's a tick below? It still made it to the triggers, but that's the only line for a bounce. And you absolutely nailed it. It's pretty easy when it looks like this, isn't it? Nice job, Sakshi. Putting on a clinic for the rest of the class. And Jen said, you know what? If Sakshi can do it, you better believe I can do it. Same trade. Accidentally exited second earlier than fib. That's okay. Accidentally. You had your target there, silly. Nice trade, Jen. Nice trade, Sakshi. Morgan says, if the girls can do it, the boys can do it too. Divergence stopped printing, so I'm not sure if this is still in play. It is. You know it's there. 50-50. I call this a... As long as I can see this line and the triggers haven't broken, Morgan, for the sake of consistency, it's a 50-50. The fact that it stopped printing means that you have smashed through it so far that the software says that's probably not a huge concern, but it is still 50-50. But it is from a strong top. And you did the same thing as Sakshi, right? Get in a little bit below the triggers because I know exactly where my stop has to go. And then smaller targets and all because it was moving somewhat slow. So Morgan, your trading plan on management says that if the market moves slow, get out. If I'm on the right side of everything, if I took the perfect entry, if I have a clear path and odds favorable momentum, but it slows down a little bit, get the hell out. That one's going to frustrate you over time. I say this clever thing every day. I think it's clever. You have to know exactly why you're going to get in, and you have to know exactly why you're going to get out, guys. And if you make gut decisions in the middle of your trade, it's going to screw you more times than it doesn't. So can we turn this into a management lesson? Do you mind, Morgan? Because sometimes you got to hear it, right? So first and foremost, strong top is amazing. The momentum is amazing. That potential to break is awesome. Your entry is spectacular. Your risk is virtually nothing. And you have absolutely nothing in the way on the chart that defines areas until down here at 68.25. Is everybody with me so far on this particular trade? Because guys, Morgan is not flying solo on this one. This is super, super, what's the word I'm looking for? Common. So Morgan, you take profits at the first sign of trouble. Love it. Beautiful. The goal's to get paid, right? And maybe you even break even. Right at the first sign of trouble. Morgan, this is an absolutely outstanding exit. I love this exit. This exit tells me that you're aware of the potential bounce points, and you're gonna make sure you get money in the account, right? And then we did this with a gentleman once, and I want you to start doing this, guys. And this is why Simulator is cool. When you want to jump ship, ask yourself, what changed? So, regarding your momentum, what changed? Nothing. Regarding the area to break, what changed? It's even closer to broken. That's a positive, right? Regarding price versus small triggers. So at the time you want to jump ship, what changed? Now I'm on the winning side of those triggers, right? I'm on the winning side of that first trouble spot. And if you start talking to yourself like this, what changed, right? And eventually, when you start identifying the things that didn't change, what you're going to do, Morgan, is you're going to change it from it's going slow, I think I should get out, to I still have momentum. That area is damn near broken. I'm on the right side of things. I'm on the right side of everything. And you're going to say something clever like, and I have nothing to lose. It feels like there's no reason to exit the trade at this point, right? And guys, I make it sound simple. I know I make it sound like, damn it, Morgan, you should know this. You shouldn't know this. You have to go through this 100 times. And all you're doing is your ability to not jump out here is a reflection of the trust that you have in the whole reason you got into that trade in the first place. Pretty cool, right? Guys, that's how management comes to be. Well, it's trust, Morgan. You bought software, right? And when you buy software, there's this feeling of entitlement that comes naturally that I should be making money with the software right away. And I'm not saying that you have that. I had it. I totally had the entitlement when I started with the software. And then you start, Sakshi, do me a favor. Take a picture. Tell me your read. Tell me what you see. I did it last time. We compared to your thoughts. So now you do it. We'll compare it to my thoughts. This will be fun. Remember, there's 3 things to talk about, Sakshi. Momentum, path, and entry. So Morgan, totally normal. And you've taken some losses, right? We've all taken losses, guys. Let me show you what Mark Novak did so you feel human a little bit. After a couple good kicks in the teeth, Morgan, I would take this entry, but I wouldn't take it in the right spot. I would take it all the way down here because I was scared. So you're already a step ahead of me. And then I would say, oh my gosh, the triggers are up. And I would enter right here because I thought it was safer, right? And then I would exit right here because I let small triggers scare me out, even though this was my look. And this is me, and I'm not saying that it's you, and maybe no one else did this. Maybe it was just me. But I would trade, and I would take 20 trades. And I would be up 21 ticks. And I would be down $200 because of commissions. Because I didn't have a management plan that I trusted yet. And I'm telling you, entries aren't the hard part, guys. Having something to lose. Because what happens is you take the right trade, and you're afraid. Now you want the money, right? And that's where the first contract does great things. And I was in a trade this morning, and let me see if I can find the picture of it. That's not it. That's not it. And I think it was this one right here. And everything set up, and I took my HVA entry, and life was good, and I had strong triggers. And Morgan, nothing changed. But I knew that I was in trouble. I knew that I was at a point that could create a bounce. And I had my management and I had my stop in place. And the cool thing is I had to say to myself, I've already been paid, right? I've already made money. I've got absolutely nothing to lose. And my indicators say that this market may continue up. So let me lock in some cash behind a pivot. And let's see if it happens. And guys, Simulator is the place to do that. Simulator is the place to practice management. And Morgan, when your entries are this good, management becomes easier, I promise. All right, Pete, large chart, odds favorable, potential to break. Got in at the low point, got stopped out right at the area it triggers. That's 5 this week. And then had to get in lower and took it to the fib. So what this tells me, Pete, is you have an arbitrary stop. That's okay, Morgan. You're in a learning process. Pete, you got stopped out at the area inside of triggers, right at triggers, once again this week. This is your Achilles heel this week. Getting in before the second correction point and getting out. Right. Right on. So if you're not willing, why not just wait for the confirmation bar? It gives you a better entry than your first one, and it gives you no loss. Establish the risk. You're in at the exact same price. Or don't take the trade. You know, just say, man, it's not perfect. Force them to confirm. My thoughts. My thoughts aren't gospel, guys. Why are some bars short? That's the body. It has to do with, what is it? So on this up bar, Wayne, the bar started right here. The box was there. It went all the way down and then back up. And then here, it started and it went up and it went down, it went up. And this is where your concentration of buyers were. And this is where your concentration of buyers were. And there's more to it than that, but I'm not going to lie. I don't know. I don't know the real answer. I understand it a little bit, but not a lot. So let's see if, hold on, just for grins. And I'm sorry. Yeah, pretty much, huh? I know you are. Let's go to market flow volume analysis, right from the instructions. And let's see if there's something that talks about the bodies. And there may not be. But what I can tell you is that you would be able to get the perfect answer from John Novak on that, and it would probably take him 2 seconds. So here's what I'm going to do, because now I have guilt that I gave you nothing, is I'm going to hit John up on Skype, and we're going to make him work today. If he's in front of his computer, we'll see if he'll do it. But I just dropped it in his Skype way and said, hey, will you come answer this question? He'll love it. It's Friday. John Novak loves to teach. And yeah, my answer was horrible. I apologize for that. All right, Zorro. Zorro, you went long. I'm not sure why. Hoping that it would break up from the term. Okay, I see why. And when it didn't break, you got out. And then when it turned around, you went down and took it down to trouble. That's a lot of work. It's a lot of work in a tight range. I'm glad you apparently came out okay, though. All right, Sakshi, let's see what you saw. You saw momentum, smalls through, 50-50, perfect. 3 divergences, says don't take it. Wait for the 13 triggers to roll up or break resistance. Sakshi, your read is perfect. Your read is perfect. We reached the key area and it didn't break. Divergence says, not the best. 2 divergences says, oh, things are getting bad. 3 divergences says, hey, you know what, Sakshi? What do you say we just sit tight and wait and see what happens? And then let me show you how brilliant you are. That's exactly what happened from that area. So remember when I said celebrate the victories, guys? Sakshi, celebrate the victory. You read it perfect. You didn't need me to tell you that. You just need the confidence of doing it. Post it in the room. And let me tell you, oh my gosh, that was the best read ever. What a great job. And then for you folks that went long right here. Did anybody go long at 45? If you didn't, good job. Nope, good job. Guys, I want you to see something. When price accelerates away from triggers and hits a Fibonacci area, in this case, the mid-band. If my large triggers are more than a full bar away, price is likely to close the gap back to those triggers. We call this the gap theory. And what the gap theory does for you, it says, hey, don't take that long. Don't take that long. Don't jump in arbitrarily. Force it to close the gap, guys. And this exact look is... Where's termination conditions? It is the exact look that says that the large chart midband is a termination. I love it. Great picture there too. What a great little extra something something for you guys. And now it seems to be heading back up. And we'll see what happens. I don't know about you guys. I feel like it's been a really good week. I feel like there's been a lot of lessons. Some of them have been about termination conditions. I have a lot of fun. You guys that are taking Janesh and Safia's class, when does that start? It starts Sunday? Oh. Cool. And guys, I got to tell you, I've got a non-disclosure agreement. So if you're in their classroom, do not post your trades in this room. Do not post your trades in this room, guys. Respect that. Steve Diego, first trade. Let me blow this up a little bit. I'm feeling old. J Trader, I don't see it. So termination, odds favorable, going into a termination, and you said, wait a minute, going into termination isn't the best. Let me get to the other side of it and see if we can't make the next one. Nice trade. I prefer to see price clear, but that's just me. Awesome. Jen, have a wonderful, wonderful weekend. And then the second one, not really with momentum. None of the triggers through directly into a termination again. But with the momentum here, you said, you know what? Let me get above trouble. See if I can make a couple bucks. Steve, little aggressive on 2 counts. At least this one had momentum. This one didn't have a whole lot going for it on that second trade. And that's why you got such a big pullback. All the way down to Fibonacci support here. That termination created a bounce for you. J Trader, what kind of... Hold it. J Trader and Jay, you're not the same person, right? No. J Trader, are you using capture software? And Wayne, John says he's on his way. His hotspot's super slow right now, but he's going to try and come do that bar thing for you. Are you using capture or Snagit, Jay? Because with capture, once I have that image preview, your Snagit, okay. I've got 2 J's. So you're J and J Trader? I just want to make sure. So you're cool? You got your picture? No. Okay. So let me go back to this one. So you're on Snagit. So when you do Snagit and you take the picture, over here, you can click on the share link and put it to screencast. And this will give you the actual, like a link. And if you click share, you have to put it in the room. So you still have to drop it into the chat box. Your pick is shown in chat. Did I miss it? I'm so sorry if I missed it. I do that sometimes. What time did you post it? And I apologize. I'm not seeing it. Ooh, hold on. Hold on, hold on. I have a sneaky suspicion here. Nope, it's not over in that one. You just posted it again? Where are you posting it, Jay? In the chat box here? All right, so here's my chat box. You're dropping it right here, putting the link in, dropping it in. This is what it should look like. Something's missing from the equation right now, Jay. So you copied the link, yes? One thing, if you're in the pop out, you have to use Control V to paste. And Jay, I just saw that the name of yours is Ass Kicked PNG. That's awesome. Need to figure out why I'm not getting it, Jay Trader. So let's go through it. You have Snagit, right? Let's do it step by step. Take the picture. Try this for me. Right click on the picture and just hit copy. And then once you hit copy, click in the chat box where you type it in and go Control V and see if that works. And if not, which salesperson are you working with? They may need to just jump on your computer and do a quick tutorial. Hold on, I've also got instructions. Just in case. Usually we can fix this, but sometimes since I can't see what's going on your end, it's not always as easy as I'd like it to be to diagnose. Just in case, there's the instructions on how to. So while you're doing that, I'm going to take a look at Jay's. All right, had momentum, waited to break the fib, divergence printed after it reversed. So all right, I'm going to take a picture of your picture. And you're trading the NASDAQ, right? Got it. All right, Jay. Price broke right here, right? That's where price broke. This is where price was when your path was clear, right around 97.50. You waited 7.5 points after the clear path. But you have momentum. Everything says up, and you take a good looking momentum trade. Do you see it? I like your entry, dude. I like your momentum trade. I think that's amazing. I really think you did a good job with it. You did have momentum. You had absolutely nothing in the way. You let it break the 1-to-1, come back to the 1-to-1, and everything about your entry, Jay, is beautiful. Are you good so far? Are you with me so far? We are 100% rock star. And then it falls apart. That's too big. Hold on. So let's take another one. And here comes your management lesson. It's not obligated to, is it? Hold on, let me see. Let me see. Let me open up a chart here. That one didn't go. That one didn't go. That one didn't go. Well, it did eventually. That one didn't make it to the bottom. Those didn't continue up. That one went up before it went down. That one went up before it went down. You see where I'm going with this, Jay? Just because you have a clear path, there's zero obligation for this market to do anything, right? What are we trading? We're trading patterns. So I'm going to give you a little line of thinking that's going to help a little bit with you here. Okay? Okay. So check it out. You ready? I was hoping. There's the key phrase. So I want to do two things. The first thing I want to do is I just want to ask you, what kind of trade was this? And let me show you what I mean. It wasn't a trend trade, right? Can we agree this was a momentum trade? And I love it. And it was a beautifully executed momentum trade, Jay. Okay. This close on the wrong side of the small triggers. This is a loss of momentum. Maybe a good reason to exit a momentum trade. Just throwing that out there, something to think about. Chew on it, spit it out, see what you think, right? And then it does in fact set up, right? And it gives you a pivot. And if you were hell-bent on holding this one, Jay, you might say, all right, now it's going in the direction. The momentum trade failed, turned into a trend trade. I got the pivot, here we go, right? And then there's your stop. And then your small triggers roll and you get two divergences and these triggers get below the large and you are 17 days below everything good. And you hold on to this trade for a 10-point loss, for a 200-point loss. And the only reason I say this, Jay, I'm going to go back, and this is a lesson that we teach in the room a lot. So check this out. Let me take a picture of the picture. I really do like this lesson. And this is, guys, this is for you momentum traders. Please pay attention. As long as I stay left of these triggers and don't close below, that market's going to continue up. This one will try to scare you. This one will try to scare you, guys. But once I get this close below, your momentum trade is fooked. It's not a momentum trade anymore. You lost momentum. That's it. So unless you're a market flow trader with extra things to keep you into it, guys, this is your smartest exit. And then here's the cool thing. If it turns into another momentum trade, it is going to keep going up until you get this close. And you don't know if it's going to be a 1-bar drop or if it's going to be a 10-bar drop. Does that make sense, Jay? So this goes back to the whole thing that I talk about, saying if you're in a trade, you got to know what kind of trade you're in. As long as I'm left of these small triggers, guys, it's going down. Once I get to the wrong side, that's it. Once I get to the wrong side, that's it. Look at this. Never blinks. Look at this. Never blinks until that damn close on the wrong side. And right here, trend trade rules weren't met. So what happens a lot, Jay, and everybody else in the room, you momentum traders, you jump the hell inners as you are. When your momentum trade fails, you either have to exit, but if you're going to hold it for the trend trade, guys, you got to go into trend trade management. You're not managing it like a momentum trade anymore. And Jay, there's just never any reason to hold a trade this long. And let me show you what I mean. And I apologize that I'm doing so many lessons on your chart. Jay, would you take a long trade right here, expecting to win? Anybody in the room? Is that your long? That's not your long look, is it? That's not my long look. That's not my long look. This is definitely not my long look. Guys, my long look runs out of stuff right about there. This is pretty much my line in the sand where I believe that market is still going to continue up. Does that make sense? That's a good idea for you guys that are putting these hope stops in play. Look left. Look at that chart. Printed it out. What printed after it turned? That? Divergence? Who cares? Who cares? Your large chart gets you in. Your large chart gets you in. Your small chart told you the momentum was over. You shouldn't be in the momentum trade. Your small chart told you the trend trade was over. Shouldn't be in the trend trade. You don't need the large chart anymore. The small chart killed your momentum trade. The small chart killed your trend trade. That's it. Ron, have an amazing weekend, man. Have an amazing weekend. So, Jay, I like the idea here. I think your entry was perfect. I think you were smoking the hopium, brother. Steve, where were you 10 minutes ago? Well, and there you go. Jay, if it's... I'm so confused. Jay Trader is not Jay. Yes? Or you guys are the same people? Steve, let me go back to yours. You can't say nope, I am. I am Jay with the cool picture who is the woodworker, or I'm a different guy. Okay, cool. Awesome, Jay. That's what I needed to know. Thank you. You're throwing me off when you're going back and forth between Jay and Jay Trader. Good. I'm glad I like that. We got it. We got it. All right. Steve Diego, let's chat. So on my second trade, not good. It doesn't matter if it's good or bad. Let's just talk about it. Right here. Actually, you know what? Let's do this. Take care, Jay. All right. Do I have momentum? Steve Diego? I want you guys to think like this. And I know that this one worked, right? Does it even suggest that you have a clear path yet? Or is that weak triggers right at the one-to-ones that just held? It's a termination. And that's a tough look sometimes. I didn't say that it was a bad trade. You just never mentioned what you were up against. You were trading directly into a termination condition without momentum. And I'm a victory celebrator. The one thing you did do is you let it get above the fib. You let it get above that trouble. You had a spot to put your stop, and you exited with a loss of momentum. Closed on the wrong side of the triggers. It took you 5 bars, right? But I think, Steve, what I was saying about your trade is it's difficult to expect the market to just fly if the large chart isn't supporting it. And then once you get above all these areas, it looks like it went pretty easy, right? Once this created the bounce, support gets tested, it moves back up, and you did have that clear path, it was pretty effortless to go up. That's just, there's so much trouble without momentum here. It's hard to justify, in my opinion. But my opinion means nothing, right? These are your trades. I'm just telling you what I see. I hope that makes sense. First bottom is weak. Yeah, I like this one, Morgan. It pulled all the way back to support, missed it by a tick. Everything rolled, going up, dig it. Still a termination condition. But yeah, Morgan, absolutely. A little bit of run through and a retest. Absolutely. Sid, give me a second and I'll help you. Sakshi. Triggers up. Not coming from a strong bottom. It kind of is, but that's okay. Still haven't broken resistance at 68.72. Wanted to go long since there is room to resistance. So, Sakshi, there is absolutely no room to resistance. And I know exactly what you were thinking here. Let me help you. And that's kind of the language that we use. If price reaches an area and the triggers remain below, no trades into that area. Does that make sense, Sakshi? Termination condition. Just because it bounced off of it doesn't mean that you have room to it. You have to let those triggers break. What you got is the bounce off of the termination condition. Now here, you might have said, oh, there's not a lot of room to the area, but from the pullback, I've got tons of room. And you took this trade, and that's because this blue fib down here, since it wasn't reached, this was a target. This is a termination. This gives me room to make money. This says, hey, the market has already reacted off of a place that may stop the market. Does that make sense? I've seen this before, that room to resistance, but resistance already held. It already said no more long trades. I hope that makes sense. Cool. That's okay, Steve. One of the annoying things about me is I see everything. And I read what you guys type on the chart, but I also look at your indicators. Because what you type is rarely as important as what the indicators say. And if there's a discrepancy, I feel compelled to point it out because I love it when you guys get lucky. But I don't want you to get lucky. So Joel says momentum, 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 but Joel doesn't say a damn thing about termination, termination, termination. So maybe it takes more than momentum. But you're absolutely right. When all three charts have momentum, it's good stuff right up until it hits that damn termination. Look at that, guys. In Sakshi, this is a great example of why termination means no trade into the area, even if there is room from where you think the entry should be. And that one creates a huge bounce. And of course, that one looks beautiful, doesn't it? Sometimes it works. So let's talk about something real quick. This will be a good way to finish the day. I just realized we're past noon, guys. This is going to happen enough to make you want to break your rules. This is going to happen enough to make you want to trade into termination conditions. This is going to happen enough to make you believe that you're invincible, guys. And I'm going to tell you right now, let's do this again. Termination held, termination held, termination held, termination held, held. Weak triggers reverse. Termination. Termination, 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 termination. Guys, more often than not, these are going to ruin your good time. So we're going to end with that. I had no idea it was this late. What a great